All right. Good morning, ladies and gentlemen. Gary, thank you for that, guys. There is medium impact news in 1 minute. 9 a.m. on this 26th day of March. All you smiling faces in the room, I love it. Or afternoon for you, Miss Jen, huh? Working in a totally different time zone. One of the beauties of what we do, right? There's money to be made no matter where you are in the world, and I love that. Good morning, Rob. Guys, I want to remind you, and Rob, thank you for sending me that yesterday. If John Novak ever reaches out to you, if anybody that looks like they're affiliated to Nexgen reaches out to you, asks you for money, for crypto, for anything via Messenger, guys, it's a scam. Delete it, block it, report it. We won't do that. Um, so just I want to let everyone know that because one of the things that NextGen has in this community is trust. And I don't want anyone ever to fall victim because of the trust that we've established and be deceived by somebody that's willing to take things that aren't theirs. So I just wanted to throw that out there, a little reminder. It's in the announcement section all the time, but I don't know how often people see that. We will not ask you, especially for crypto. Um, Not going to happen. We are very comfortable calling you on the phone and asking you for money. All right, guys, let's get going. We're going to do it different today. I'm going to change things up today. We're going to focus on fundamentals a little heavier today. We're going to focus on the basic path a little heavier. But before we do that, we're going to check news. There is medium impact news right now as we speak. Medium impact news can make the market jump and bounce and do all those crazy things that we don't want it to do when we're looking for trades. The cool thing is sometimes news can knock something loose when the market is range bound. So just understanding that this is a point where the market may react, where the people that move the market may react, gives you the ability to one sidestep. And not get caught in their reaction, but be on the ready if their reaction sets up that movement that you've been waiting for 4 hours. Our next news release is at 10 a.m. It's the cheeseburger confidence. It's not really cheeseburger confidence, but Ron has ever ingrained that in my brain. It's the Conference Board Incorporated consumer confidence. But the reality is it doesn't matter. They could call it Bob's big announcement. And we know that because of the red box, it's high impact. It can affect the market. It can make it move. And most of the traders that I know, I would say 99.9% of the traders I know, make the decision to not throw themselves in front of that freight train of emotion. So we check this every morning. We do it as a classroom. You should do it as yourself because I'm not always here at 8:30 in the morning. And what that does is it just kind of helps you out. And then everything I talk about, guys, is going to come from the education page. There's zero secrets with NextGen, guys. I can't stress this enough. I want you to be successful. We want you to be profitable. We want you to have the easiest path to success ever. And everything that you need really is right here off the education page. I'm going to start with the software user guide. The software user guide is your NinjaTrader how-to. There's always a lot of questions about NinjaTrader. Mark, how do I do this? I can't see that. And I'm more than happy to always give the answers because that's really what the classroom is for, guys. 100% make sure that anything that you need is taken care of when you have me live. But if it's after hours, maybe it's a Saturday and you're like, oh my gosh, how do I scale my charts? Or how do I set up my ATM strategy? Or how do I delete old charts and templates and start fresh? Guys, all of that is right here in the software user guide. It really is. It's your NinjaTrader how-to. Oops, I'm going to click on it one more time. And I'm going to drop this link into the room, guys. This is probably the most important thing for the new user, is being able to take a picture, being able to present a picture, and then more importantly, being able to relay what it is that you're seeing and thinking and feeling on that picture. So we are going to talk about that a lot this morning. We're going to go through it together as a class. Hopefully it's helpful for a lot of you. And then I'm also going to open up the tutorial section. And this is where all the answers come from. This is where the rules are explained, where you see them visually, where it talks about what they mean to you as a trader. There's several trades that are mentioned here in the tutorial section, but the one that we focus on for the first hour pretty much every day is the high probability trade, guys. And this is defined is when each indicator on every chart agrees for the rules for the trade. This is when the triggers are the strongest. There's nothing in between you and your target. No termination conditions exist. Guys, a focus on this trade because this is the trade that turns you into a chart reader, guys. And chart reading is 90% of your day. I can't stress this enough. Good morning, Roku. Chart reading is literally 90% of your day, guys. Chart reading is you waiting for the market to tell you that it's time to take a trade. And sometimes your chart reading goes on for 20 minutes. And sometimes you sit for 4 hours when the market is caught in between areas, when your rules aren't met. Because as a rules-based trader, the goal is to have a statistical advantage each and every time you pull the trigger, to have a pattern that repeats itself, that is repeatable, that can be back-tested and studied and proven, and that's what gets you into the market. When you're a chart reader, you're going to understand how to recognize these patterns. When you're a chart reader, via these patterns, you're going to understand where the market is likely to continue, and you're going to understand where the market is likely to go, and you will understand where the market is likely to stop. But all of those are just looking at your indicators and taking the information. The easiest way to become a chart reader is to focus on the high probability trend trade first, to focus on these simple advantages that are easily recognizable, piece them together for this highest probability trade, and then your ability to read your charts really opens doors for you to begin to recognize patterns beyond the high probability trend trade. So I'm going to share this, your step-by-step process to becoming a confident trader, ASAP, guys. It revolves around posting your trades in the classroom. And I did a little work on this today. Posting your trades in the classroom, not just taking a picture and dropping it in and saying, man, I can't wait for Mark to make me a better trader. That's not how it works, guys. Every time you post in the room, you have to share your chart read. Remember that we're becoming chart readers. So I want you to tell me, what kind of trade was it? And I do this because when you tell me what kind of trade you're in, what that does is that allows you to understand how that trade needs to be managed. If you're in a momentum style trade, well, then you can understand that a lack of momentum, a loss of momentum, is a good reason for exiting. And if you're in a trend trade, hitting the next key Fibonacci area is never a bad idea for profits. Guys, remember that we're in this to get paid. So I want you to identify on your large chart what it is that you're looking at, what the conditions are, what advantages are in place. And on the small chart, tell me where you got in and why. And then tell me where you exited and why. And a lot of times I'm seeing these trades where people love to show me their entries, but not their exits. They're not looking at the different factors that are going on after the entry. Guys, show me, give me a complete picture of what's going on. And I promise you, my pledge to you is that I will give you the best feedback possible. Every trade that you have, win, lose, or draw. I'll tell you what you read correctly, maybe what you read incorrectly, what may be costing you money, what could be adding money to your pocket. And the goal is that we do this every day so that you and I can become comfortable with one another. We can have conversations about everything that you see. And the feedback is there for you. And I posted up at the very beginning of the day, guys, I posted that little snippet from the educational path that says to minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw. And if you win and the rules are wrong, you may have a short-term victory but a long-term failure. And how are you going to know the difference? To be sure, you need feedback from us, and we're here to help. Guys, I'm here 15 hours, Monday through Friday, live to give you feedback on everything that you see and do. If you place a trade on the simulator, if you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new, guys. That's it. And this is the part of the educational magic. And I wanted to say, I always say that this is for me. Tell me what you're doing, right? Tell me what you're doing. Guys, it's not for me. It's for you. It really is. I can read charts. I can look at the charts. I can understand exactly what's going on in your chart. And in most cases, I can get into your head and know exactly why you did what you did. But the idea is that if you really want to be consistent, if you really want to follow your rules because they provide an advantage, if you really want to be able to manage your trades appropriately, then you have to let your chart read be the reason for your trades, not your emotions. And this process of writing the read on every chart, what it does is it solidifies your ability to repeat the same thing over and over, to be able to do the exact same thing so that you can repeat the successes that it brings. So post your trades in class and then use your spreadsheet, guys. The spreadsheet it's now 4 tabs. It's now 4 tabs. Rob, I haven't seen that in a long time. Let's do this real quick. There's stuff in it. Sometimes you can Google, is Discord down? And then Discord will tell you if they are. March 26th, there's no incidents being reported today, so it may not be a Discord issue. And I'm not sure exactly what the fix will be for that. So you may just have to reach out. One thing that happens, Rob, is if you log in on your phone and then you try to go to a different one, it'll ask you for the 6-code verification. And that may be what you're experiencing right now. They'll ask you for that 6-digit code. I forget where they put it. It's in log files somewhere. You may be able to get with Jason to help you find that. Guys, your spreadsheet, it used to be 3 tabs. It's 4 tabs now. I'm telling you, I'm working tirelessly to make this as easy on you guys as possible. But your first tab, this is your trade tracking sheet. This is where every trade that you take, drop it into this first tab, guys. Talk about what type of trade it was and how did you feel and what were the advantages and how did you do, right? What was the result? And then the final section here is notes from class. That's where every time you post in the room, I'm going to give you feedback. We're going to talk about your reads. We're going to talk about your entries. We're going to talk about your exits. I'm going to warn you right now that I'm not always going to say what you wanted to hear. Sometimes I'm going to tell you that you got lucky, and it's probably not a plan for long-term success. You will try to rebuke that by telling me that you made money, and that's cool. I'm not here to tell you what kind of trades to take, but every chart that's posted in my room, I'm going to talk about advantages and disadvantages. That's my job. That's exactly why my brother pays me. But the thing for you to do with this is to come back every morning and study it and ask yourself what worked and what didn't work. Again, we're going back to the idea that your trading plan should be repeatable, that your trading plan should be concrete, that your trading plan should give you 2 options. Either your rules are met or they're not. So you need to know what's working and what's not working and what feels easy and what feels forced. And if you study what you did yesterday every morning, not just the pictures, but also the words on the pictures, man, it's going to set you up for the day. It's going to accelerate the learning. So make sure that you're taking advantage of that first section. Every time you take a trade that fits the rules, every time you take a trade that is very much repeatable, that does offer you a statistical advantage, drop it into your personal trade setups. And this is, excuse me, this is where you're building your trading plan. This is where you're saying, I'm so comfortable with this look. I love the advantages. I've tested it. It wins more than it loses. This is coming into my plan. And guys, your goal is to fill this up with as many pictures as you possibly can. To give you a little template to work off of, we have the final tab. And the final tab is the client's perfect trades, guys. And I say the client's perfect trades because there may be deviations from the rules. It may not be a high probability trend trade. It might be a medium probability trend trade. It might be a momentum trade. It may be something other than that core base. But the reality is that every one of these pictures, people have taken the advantages and turned them into a trade that suits their needs the same way that you will. There's an entire section dedicated to NASDAQ. One of the biggest challenges with NASDAQ is entry nuance. And I've blown out a lot of accounts learning these for you. So study these. And if you have a question about anything in here, ask me. There's a whole section dedicated to management, starting very, very basic, and then how to begin to learn to hold for more. Patterns that repeat themselves, guys. All the market is patterns repeating themselves. Every time you recognize something happening, whether it's split triggers on your entry or whether it's a gap theory in place, take a picture, annotate it, commit it to memory. And then same thing with termination conditions. And then I've done one more tab, guys. I've just added this one. I built it this morning for you. This is your 101 tab. So if you're brand new, if you're making chart read mistakes, guys, and again, I'm not going to make you do this. I'm not going to give you homework. You have to decide whether or not you want to be a trader enough, a chart reader enough to do this. But this is your chart reading 101. And I'm going to tell you right now that this is a pretty solid plan to get people where they want to be. Because where you want to be, you have to be able to recognize some very simple looks. You have to be able to recognize some patterns. And this will reinforce the lessons, guys. This will set you up for faster success. And this right here tells you to take 145 pictures or 165 pictures. And right now, half of my class is puckering up and they're saying, well, Mark, I don't want to take 125 pictures. That feels like a lot of work to make $100,000 a year. I don't want to take 125 pictures because really that 38 minutes that I spend doing this is going to pull from my ability to make money each and every day, right? But guys, the task isn't just to take pictures. We're annotating charts with the whys. Why is this an advantage? Why is that an advantage? What does this advantage mean to me? What does this advantage take away from me if it's not present? I'm going to tell you right now, if you go through this goal or through this process, the looks will become easy. The advantages will become easy. The patterns will become easy. The more you put into this, guys, the more you get out of it. So I'm trying to figure out a way to get you guys to not want to study and maybe get you excited about getting to your goals faster. So we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. That's our first step today. We're going to simulate, or you're going to simulate. I'm going to be in a live account because I've done my homework. But I want you to post your pictures in class. No sound? Shit. Anyone else, or is it just Ron? No? 1 second, guys. All right, can you guys hear me now? You have sound, no picture. I just killed and just reloaded, so we're good now? Cool, there's the picture. Awesome. Thank you for saying that. We're good. Tony, you were good. Okay. Awesome. Guys, simulate. Practice the correct trades, not the wrong trades. Trust me on this one. I see a lot of people trying to become simulator millionaires and it doesn't translate over to their live accounts. And I think all of us at some point can identify with that. Getting lucky on simulator and expecting that luck to carry us the next 30 years, and it rarely does. And we are going to simplify. We're going to focus on a high probability trend trade, guys. We're going to talk about this trade that only has 3 rules. And these 3 rules happen on only 2 charts. Each rule provides an advantage. Each rule gives you a singular advantage, and it's the advantages that come together to create a trade. So we're going to use one chart, the most current bar on the large chart. Excuse me, 1 second. Hold on. My apologies to the YouTube users. I couldn't get to the mute button fast enough for the sneeze. We're going to use 2 charts, guys. And we are going to use 2 charts because what this does for us is it creates a world of advantages. And let's get my laser pointer up. Your large chart is a slow moving chart. Your large chart is a broad stroke of a brush. It is a freight train that is loaded down and heading through the Pacific Northwest, and it's hard to stop. It's hard to fight the large chart. It takes a train like 2 miles to stop when it's at speed. The large chart's very similar. So we're going to take the most current bar on the large chart. We're going to take one bar. And from this one bar, we are going to define direction, momentum, and areas, guys. We're going to get 66% of the advantages that it takes to be in a trade from one bar on the large chart. Rules 1 and 2 are met on the large chart. That gives us the advantage of momentum and a clear path. Guys, if anyone can hear me, give me a Y, please. All right, guys, can you hear me now? Are we better now? I apologize. I promise this is Discord, not me. Can you guys hear me? Are we good? Give me a Y if we're good. Anybody? Nobody? I'm dancing around. Okay, no sound? All right, there's a reboot on the microphone. Any sound? No? Okay. And for you guys watching YouTube, sorry about this. Sometimes Discord gets a little sideways and it becomes difficult for it to handle all the tasks. And I'm not sure why it does this, but it does about once a month. So thank you for your patience, YouTube watchers. Getting close. I will get this back up in just a moment and we will be set. All right, guys, I'm back. Can you guys hear me now? And I apologize for the problems here. I don't know why Discord does this to me about once a month. So we're going to hang out for a second. We're going to wait. And we'll get a few more people in here because I think we're closer to 30 and I'm only at 12 right now. So for you guys that are listening to me right now, especially you people that are struggling a little bit, I want you to really consider filling up that page. I really want you to consider getting those 25 pictures of strong triggers and those 25 pictures of weak triggers and those 25 pictures of a clear path of a termination, 50-50 looks and entries. Man, I can't stress enough, guys. One of the biggest challenges that I see is understanding the very basic rules in half-truths, if you will. Understanding the most basic concepts, the 101 concepts that are so vital to success, and not being able to recognize each rule individually. So we're going to focus a lot on that today, I think. So I'm going to get going. Poor YouTube people. They're like, oh man, Discord. Guys, large chart is going to give us our first two rules. Once the large chart does what it needs to do, once we have momentum, once we have a clear path, we're going to turn our attention to the smaller, faster chart. We're going to refine that broad stroke of a brush. And that refinement process involves about 15 to 30 bars on a smaller, faster chart. But the cool thing is what it does for us as users is it lets us take momentum in a clear path on the large chart. And if everything is going up, we are literally going to be able to buy low at Fibonacci support. We're going to be able to get in on the smaller, faster chart, refine that broad stroke of a brush, and it's going to let us reduce our risk, increase our profit potential. And the same is true if the market is going down, if the market is headed to the downside. What it does is it lets us sell high. It gives us the visual of being to recognize the highest point where the market is most likely to continue. And again, that's going to reduce your risk and it's going to maximize your profit potential. So not fighting the large chart, really embracing the ideas of advantages and speaking to yourself in terms of advantages. Every time you look at your chart, you should be asking yourself, do I have momentum? You should be asking yourself, do I have a clear path? And you should be asking yourself, do I have an entry area? And this is true for any and all trades that you take, not just the high probability trend trade. And the moment you begin to move away from advantages, away from chart reads, and simply look for the trades, this is where I see the typical trader go sideways. So we're going to keep it very simple with three rules. The first rule is strong trigger lines on your large chart, because your large chart is going to define direction and momentum. And we're going to start with direction, and it really is this easy, guys. If the background on your large chart is green, the market's going up. The large crowd wants it to go up. The people in charge want it to go up. And all you have to do is go up with it. And it takes a lot of the stress out of your trading. If the background is red, the market's going down. The people in power want it to go down. So you just kind of going down with it, again, it alleviates the burden of opinion. And what it does is it really gets you going with the flow. And the only way to have strong triggers, the only way that you can have those strong trigger lines, awesome, Rob, is if all the colors match. And when we get into this conversation, I want to say that you will find trades where all the colors don't match. You will find opportunities where maybe the small and the large aren't the same color. And you may find opportunities where the background and the triggers don't match. But if you are a brand new user, if you're learning to become a chart reader, I can tell you right now that in order to have the advantage of momentum, in order to have the advantage of strong triggers, your small, these solid lines, your large, these dashed lines, and the background must all be the same color. And then strong triggers means that the small have broken above and away from the large, created space. There's a gap between the two as they are widening. They're in the direction of the trend. And when you have this look, this strong trigger look, the odds are favorable for the market to continue in the direction of the trend. And what this means for you is that when you have this strongest trigger look, rule number one is in place. You have the advantage of momentum. And this is the most advantageous look for buying Fibonacci support on a smaller, faster chart. And then when the smalls are below the large are wide, the space is there. This is your strong triggers. The odds are favorable for the market to continue down. So this is the absolute best look for selling Fibonacci resistance on a smaller, faster chart. On the large chart, you won't see all the motion that gets you to your entry. But on the large chart, you can go back and study these tails. These tails represent pullbacks, whether it's to the short side or to the long side. You're going to be able to pinpoint where that tail is most likely to form. And we'll get to that. But let's start very basic, guys. Strong triggers. Let's find my large chart. Strong triggers is a pretty easy look. When the smalls are above the large and space is created, this is your strong trigger look. When the smalls are below the large and the space is created, this is your strong trigger look. So guys, we can go to our capture software and click, and let's take a picture of the large chart together, right? And let's take that picture and let's become brilliant. Let's draw two arrows and use the call out button and say strong triggers means separation between the small and large in the direction of the trend, maybe like scissors opened. This look gives me the advantage of momentum. Rule 1. And guys, this is all you're doing. And maybe do a box, right? There's that separation. There's that separation. So what we've just done is we've taken a picture of a market. We didn't take a trade. But now what we've done is we've identified the look associated with strength. We've identified the advantage that it gives us. And I'm just going to upload it to my screencast. And I'm going to copy that screencast link, guys. And I'm going to go to my spreadsheet. And I just got the first picture for strong triggers. And I'm just going to pop it in here. And I'm just going to call it strong because I know it's there because it's in there. But now I've got my first picture, guys. Now I've got my first picture of strong triggers. And what I'm doing is I'm associating this look with what it is that I'm looking for when it's time to take a trade. So the opposite of strong, guys, is weak. But the market's going to go from strong to weak. And there may be opportunities all the way down. So for the brand new user, odds favorable momentum is the best of the best, guys. This look carries the market in the direction of the trend. This look can break key areas. This look can even cover a lot of mistakes. But momentum is a very definitive look. It is separation between the small and the large, like scissors open, ready to cut. And then when the triggers remain down, but one of the small triggers gets inside of the large, you can look at this and you can say to yourself, momentum is slowing. I'm losing the advantage of momentum, because you're always speaking to yourself in terms of advantages. Short trades can still be taken, but you have to use your chart reading to make sure everything else agrees. And then with both triggers down, once both of the small triggers are inside of the large triggers, you have a weakening or slowing of the trend. And guys, you're going to hear me say in class all day long, anything can happen. Anything can happen is the term that you're going to hear in class. Short trades can still be taken, but they're taken void of the advantage of momentum. You no longer have a market that is likely to push in the direction of the trend, and really, it better be perfect on the other charts. Your reads better be spot on. And then when those weak triggers hit Fibonacci support, that's when areas are more likely to hold. But I want you to see something, and I want you to listen to the words. Strong triggers, odds favorable. Weak triggers, anything can happen. Guys, our goal is to find success through advantages. Our goal is to understand. So one of the other pictures that we can take, and we're going to take a lot of pictures today, guys, and we'll just do this right here. And this is a great picture to take, because what you're going to see is that just like in the manual, those are weak triggers. So I'm going to take my call out button and I'm going to say weak triggers. Small's inside the large. That's the view. I'm describing how I can recognize it. I have lost the advantage of momentum. Anything can happen. And guys, look what happens. That becomes a turning point for the market. So once again, I'm just going to upload this picture. I'm going to get it to screencast, whether you're using Snagit or whether you're using Capture. And I'm going to copy that address, and I'm going to go back to my spreadsheet again, and I'm going to put my first one in for weak triggers. Is everybody following what I'm doing here? I know you guys don't want to do this much work, and most people don't. It's okay. But if I have 25 pictures of strong triggers, what are the chances that I'm going to make a mistake regarding strength in the move? And if I have 25 pictures of weak triggers, how many times am I going to see that weakness and not think to myself, holy crap, anything can happen, right? So what I'm doing is I'm reinforcing, guys. I'm reinforcing these rules. I'm reinforcing these looks. I'm going through, and I'm not going to do this for everything, but I wanted to do that because if you really want to be a day trader and you find yourself making mistakes, if you really want to be a chart reader, I just gave you the keys to the kingdom. So strong triggers versus weak triggers, and when weak triggers hit areas, guys, they rarely break. You're more likely to bounce. That's when we get these termination conditions, and this is rule number 2. Rule number 2 says termination conditions false. Great question, Roku. So when I make a hyperlink, if I paste that screencast account in there, it just gives me the screencast account. So Roku, go to Insert in the top left corner and go to Link. And what that does is that creates the hyperlink. So I can paste the address in the address bar, and I can change this to weak triggers, and it gives me that link. And then what's cool, Roku, is once you do that 4 or 5 times, it begins to default. It begins to default. Is your chart open, Rob? Is your spreadsheet open? No. So that's going to be the first thing. And then once it's open, if you right click on the Excel, you'll get an option to pin it to the taskbar, and then it'll always be there. All right, guys. Large chart told us the direction of the move. The large chart also defined momentum with the small triggers above the large triggers in space. So now we're going to let the large chart define areas. And we're going to be able to use this large chart to really see 3 different things. But first, the first thing we're going to look for is whether or not we've reached a termination condition. And a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of that area and the T3 trigger strength and location, the same triggers that give you momentum, or the same triggers that let you know that there's a loss of momentum, are going to be the key to understanding some pretty simple concepts. You're going to understand when we get to one of these lines, these are where decisions are made by the people that move the market. We're going to use the trigger lines, and that's going to let us know if they're likely to stop the market, if they have the potential to break, or if they've broken and our path is now clear. So Jen, large chart, the first thing I'm doing, if I'm going through the process of reading my charts, the first thing I'm saying is which direction is that market going? Is it going up or down? And for the new user, this is a huge safeguard by not fighting that overall direction. And then the second thing that I'm asking myself is, do I have the advantage of momentum? And this is if I'm looking for a high probability trend trade. So Jen, if you're looking for something else, your order of operations may be a little different. And then once I have momentum established, once rule number 1 is true, I'm going to ask myself, have I reached an area, a termination conditions? Did I reach something that may stop the forward progress of the market? So I haven't left the large chart yet. I'm still on the large chart. I've never even turned my attention to a smaller, faster chart. I'm letting the large chart get the bulk of the work done. And then if I need to know whether or not I've reached a termination condition, it's a simple recipe, ladies and gentlemen. And it's crazy that it truly can be this easy. There's 2 things that have to happen. And the first is that price reaches the area. And I can't stress this enough. So these areas are going to be where decisions are made. These areas are where the people in charge, guys, where the large crowd, the guys that create momentum, that create direction, the people that establish whether or not these areas are going to hold or break, they have to reach the area because that's what sets off the decision making. So when price reaches the area, in this case it's Fibonacci support, check your trigger lines. And if they're not below the support, don't take any more trend trades, shorts on the small chart. If they're not below this blue line, guys, don't go short anymore. This is an area that may stop the market. It may create a bounce. It may create a reversal. And that's the easiest way to recognize. This is when no more trades. This is when rule number 2 isn't met. And it's when I no longer, have a clear path. So when is the path clear? It's really pretty simple. And I'm going to use a shape tool real quick. Right here, price reached Fibonacci support, and the triggers didn't break, and we had to sit on our hands and wait and see what the decision-making process was. When both the small triggers, when both the small triggers and the large triggers get below the area in question, the area is considered broken. Support begins to behave as resistance. And it takes both the small and the large triggers to get to the other side for an area to be broken. Is everybody comfortable with that? There are 2 options for the brand new user. There are 2 options for the high probability trend trader. There is the option of, and I'm going to do this, I'm going to take those questions off of there and just let it be this. If price reaches the area and none of the triggers break, there is no clear path. Rule number 2 is not met. If both the small and the large triggers get through the area is now broken and the path is clear. And guys, I think that if you allow it to be this simple for at least 20 days, 30 days, get really comfortable with the idea. I'm trying to change the picture in here for you guys. If you get really comfortable with the idea that there's only 2 options, that there's only a clear path or there's a termination condition, what it does is it helps minimize your opinions. It really, really does. So it's either broken or it's not. The path is either clear or it isn't. And when the path is clear, guys, we're looking for that momentum. And if we have that momentum and the most current bar hasn't reached the next area, well, then we're looking for a pullback to resistance on a smaller, faster chart. That's okay, Kenny. I actually didn't get to this one yet, so that's a great question. The one thing that I do, guys, is I'm going to try and keep this really blanketed for the new user. If small and large break, look for the trade. If none of them break, sit on your hands. And everybody's good with that. Kenny, are you comfortable with that? I'm going to give you one more look. And this is exactly what Kenny just described. And let's just do a big old call out here. So when the small triggers, and I'm going to go all caps on this one, Kenny, because I think this is one of the most important parts of this one. Smash through the area. With odds favorable momentum. Not weak triggers. Because we don't expect, let's not even do that. Because historically, weak triggers struggle to break areas. So 50% of triggers break, 50% do not. And then this is what we call, very good, Rob, a 50-50 trade. And what this means is that this area has the potential to break. But since both sets of triggers are not through, it is not broken. Not high probability trend trade. This moves us over to what we call a medium probability trend trade. If you look for an advantage, which means that it has to be managed aggressively, Problems have to be identified. Risk must be reduced. And profits taken at trouble. So guys, this medium probability trend trade, when the smalls have broken but the large have not, is the potential to break. This is when you go outside that highest probability trend trade with all the advantages. This is when you go outside the idea that everything is hunky-dory, that you have momentum, that you have a clear path, that you have an entry area, and this literally removes the clear path, Kenny. So I'm going to give you guys a plan that introduces you to this first medium probability trade. But what I want you guys to understand is that if both sets of triggers are not through the area, it is not, cannot be a high probability trade. It cannot be the best of the best. It cannot be a trade that typically wins 70 to 80% of the time. So what you're going to be able to do is take that picture once again, and let's begin to identify what it means to have a 50-50. Let's identify the advantages that are no longer present. Let's identify that it's not a high probability trend trade, because guys, I'm telling you, once you know what you're getting into, management becomes a breeze. You know exactly how you should manage these trades. So no triggers, no trade. Both triggers, clear path, look for your rules to be met. 50-50, you're outside of the high probability. Kenny, does that help? Does that answer? Awesome. And guys, I'm going to tell you right now, medium probability trades are going to be the bulk of what you do. But you still want to keep those statistical advantages in your favor. So let's talk about the pivot stop out. And this picture also reminds you that 90% of your day is spent reading indicators, guys. So moving left from right, price hits Fibonacci resistance, the triggers remain below. No long trades. Guys, I want you to be okay with the idea that you don't have to be in every move. From resistance, the market pushes all the way down to support. And then here is this little phenomenon. Does everybody see the negative number and the magenta line? This negative number and magenta line tells me that there was a loss of momentum at this pivot. This is not a termination condition on its own. We don't even know that that exists until about the third bar down. It's just a loss of momentum. So we go from resistance to support. Triggers remain below, triggers remain above. This is one of those scenarios, guys, where there's nothing to do. You can't have a trade because there isn't a clear path. And then it comes all the way back up to resistance, and that, with the triggers below, is a termination. And then it reaches the divergence high. And that's a termination condition. And when price trades above the divergence line and then back below, now it's a pivot stop out. Everybody, did you lose me again? Can anybody hear me? Is it just Roku? Okay, so Roku, reboot. Cool. Whew, thank goodness. Man, Discord is giving us challenges today, aren't they? That's okay, Jim. You can yell. I heard that in like a hallelujah voice. I can hear. Good job. Divergence is a loss of momentum. Price reaches divergence, triggers remain below as a termination condition. This alone can reverse the market, but when price trades above and back below a divergence high, now it's a pivot stop out. And guys, a pivot stop out is powerful. No more long trades if you get a pivot stop out. And if it coincides with Fibonacci resistance or support, then it becomes even stronger. It adds power to the top or bottom. And then when this termination reverses the market, when a no triggers through termination condition reverses the market, guys, that's a strong top. And a strong top is the precursor to the highest probability trend trade you can take. Notice that from this strong top, the market reverses. You're very welcome, Rob. I get odds favorable momentum, separation between the small and the large. Price hasn't reached Fibonacci support yet, And there's one of those tails where you guys pinpoint where the market is most likely to continue. Guys, this trade is the trade that typically wins 70 to 80% of the time. This is the trade that creates a truckload of confidence through the memory of success. This is a pattern that is repeatable, that is testable. This is a pattern that you can go back on any market, whether it is stocks, whether it is options, if you're hedging your soybeans, I don't care. The pattern repeats itself, guys. This is what we're focusing on right now, is the absolute best of the best. And it's important to understand that some days you have to be patient. Some days you have to just say to yourself, dag nabbit, my rules aren't met, and because they're not met, I choose not to take a trade. I posted a picture of that this morning. I'm going to bring it up for you. And I want you to see how rule number 2 kept me out of the market. Rule number 2 started at about 5 a.m. and it didn't end until after 8:30. There's a pivot stop out straight to support. There's a pivot stop out at resistance, straight to a pivot out stop out at support, straight to resistance. And then the market finally headed down, guys. This is a fight between buyers and sellers. That's something that you don't have to be involved in because you have rules designed to keep you out of that consolidation. You have rules designed to let you recognize when you no longer have the advantages. So here, strong triggers break support, doesn't even blink. And if you didn't catch a move, if there wasn't an entry, guys, by the time you get down here, you're feeling a little frustrated and you're thinking to yourself, man, I've been watching the market for 13 minutes and I'm not up $1,000. I'm going to take the next short trade I see. And then rule number 2 says we reached 1-to-1s, the triggers are above. Don't take that short. If you broke your rules, you took a loser. If you didn't break your rules, you're feeling thankful because look at the bounce that came off of that termination condition. But you'll notice that it pushes directly into resistance and all the triggers remain below, which means that I don't have a clear path to the upside. I definitely don't have momentum to the upside. My rules aren't met again. And guys, this little dance continues for about 45 minutes until finally that termination condition reverses the market, gives me momentum, my path becomes clear, and we all pinpoint. We all buy low at Fibonacci support on a smaller, faster chart, and we ride that wave of awesomeness all the way up to Fibonacci resistance. And it's what you don't do when there's nothing to do. And I haven't found an eloquent way to say that. It's the money that you don't lose when your rules aren't met, when you don't have a clear path. Whoops, wrong one. When you don't have a clear path, when you don't have momentum, still don't have a clear path, momentum, the triggers don't match, I can't do it. And there's all these opportunities for you to lose money. But if you're patient, if you let them sort it out, guys, eventually somebody wins. And it's very much like a bus, right? If you miss a bus, another one comes along. It costs absolutely nothing to be flat in the market. It costs absolutely nothing to not be in the wrong trade. And guys, I'm telling you, the money that you give away in the wrong trades, and there's an easy opportunity to lose $1,000 there, well, it may not cover the money that you make in the right trades. So I want you to train yourself from day one. Either your rules are met or they're not. Either you have the advantages or you don't. And what you're going to find is it's going to save your bacon an awful lot. So guys, that's using the large chart for termination conditions. And I want you to see, let's just go through it. And we'll do it again here. Let's take a picture. I'm going to pull up my capture software once again. I'm going to click on it and I'm going to take a picture. And once I take this picture, we're going to go through and we're going to annotate again. And I'm going to draw an arrow. And we won't even worry about all the other ones, but I'm going to write the recipe. Price reach Fibonacci support. All triggers were above. No short trades. This is a term. No clear path. Thank my lucky stars. Look at the bounce. And all I've done here, guys, is I've said to myself, my rules aren't met, but I'm gaining this ability to see my rules. So I'm going to go to this one and I'm going to put it into my termination conditions. And guys, I want you doing this. You don't have to. I can't make you. But I'm telling you right now, the more pictures of terminations that you take, the more you begin to believe 1, 2, 3 times it stops the market and the rules are met. Let's see where that big move up started. How about Fibonacci support with absolutely no triggers through? How about resistance, pushing it all the way down? How about resistance up here, starting the move down? So guys, if you go through and you begin to take these pictures, you begin to recognize that you have this unbelievable advantage at your fingertips. You have this incredible opportunity to know exactly where the market is likely to stop. And if you spend a little bit of time studying it, you're going to be able to recognize it live in the market when the market is moving. And the more pictures you take, the easier it gets, guys. So is everybody comfortable, and I'm really hoping that you are, with the idea that if price reaches an area and the triggers don't break, it's okay to do absolutely nothing. It's all right to sit on your hands, to say I don't have an advantage, because our large chart just defined direction, it defined momentum, and it defined the areas. And guys, these are blanket rules for new users. As you grow, you're going to find some great opportunities. Jen, so you didn't get caught in that big consolidation earlier? Didn't give any money up there? I sat and watched that for 2.5 hours and didn't take a trade because I couldn't get my rules met. It's pretty awesome. So guys, large chart defines areas. Areas are used to establish where the large crowd is most likely to react, where they're likely to make decisions. There's also going to be times where your small crowd, where that small chart, your entry chart, is going to be able to help you recognize change before the large chart is capable. Because remember, the large chart, guys, like one bar establishes momentum. One bar establishes direction. One bar establishes the clear path. Well, we can use that refinement process of the smaller chart to recognize when we're losing momentum in a tighter range to identify change on the large chart. And 3 divergences in the same price range may terminate the trend. It's a magical word, may. It's not guaranteed to terminate the trend, but it may. And if it may terminate the trend, guys, you just lost your statistical advantage. So 3 from a low, 3 from a high. Guys, that kind of look is going to help you see when the market is turning from seemingly nowhere. This look becomes more powerful when your small triggers work their way inside of the large triggers. When you get that anything can happen look. And look at this, even on a small chart, you can still recognize odds favorable momentum. You still have the ability to understand when anything can happen. So that makes those 3 divergences more powerful. And then it becomes more powerful still when the third divergence is higher than the previous from a low or lower than the previous from a high. It creates a head and shoulders pattern. Guys, lines on the small chart are used for entry. The only time the small chart will tell me that rule number 2 isn't met, that I don't have a clear path, is if there's 3 divergences in the same price range. So guys, that's rules 1 and 2. Identifying the advantage of momentum through strong triggers, identifying the advantage of a clear path by not trading in determination conditions. And once we do that, once we have those advantages, the market is up, there's your direction. The momentum is strong, there's rule 1 being met. We haven't reached Fibonacci resistance and we have cleared the previous, there's rule number 2 being met. Let's take that information and let's refine it on a smaller, faster chart. Let's use the small chart to reduce risk. Let's use the small chart to increase profit potential. And we're going to use an entry. We're going to limit order. We're literally going to wait for the market to come to us. We are that good. And we're going to use it at an area Fibs, midbands, yellow 1-to-1s. Areas on the small chart are used for entry, not for terminations. But here's the key, guys, and this is the most broken rule ever, is we're going to let those areas be inside what I call favorable large triggers. Favorable large triggers mean that the large chart, large triggers, the same ones, these smooth large triggers, the ones that are used to establish momentum, are overlapping with the synthetic triggers, which are nothing more than the large chart triggers. I'm sorry, small chart large triggers, large chart large triggers. They should be one on top of the other. They should be overlapping like snakes riding piggyback. And guys, we trade from areas within favorable large triggers. These trigger lines are nothing more than a correction point. They're moving averages. And the market loves to return to them. It really does. But these moving averages on their own typically are not enough to stop a market cold in its tracks. So we give it something solid to bounce off of. We give it areas inside of those favorable large triggers. So rule number 3 on the small chart is going to give you this advantage of buying or selling a pullback at an area inside of favorable large triggers. Your entry comes from the point where the market is most likely to continue. So when it's time to go, when the large chart says up, you're going to be able to identify low. You're going to buy low at support, and you're going to let that uptrend hopefully carry you to the next area. And when everything says down, you're going to be able to sell high at Fibonacci resistance, and you're going to have the luxury of doing this because there's a refinement process. There is taking that 1 bar's information, and within that 1 bar is 15 to 30 bars on the smaller, faster chart. The bottom of the most current bar should be the beginning of the pullback. The top of the bar, that tail that I told you you would be able to pinpoint, is going to be resistance inside of favorable large triggers if the rules are met. And by selling high, we increase profit potential. By selling high, we reduce our overall risk. And guys, straight from the spreadsheet, right in the client's trades, there's a couple run-throughs. Not on the large chart, Kenny, on the entry chart. So when we look at the entry chart, and I'll show you a 2-chart process. Yeah, no worries. And Kenny, man, keep asking questions. I love it when you guys ask questions. Everything is dependent. You know what? Let's do a long trade. Everything is dependent on the large chart telling you that it's time to look for a trade. Everything is dependent on the advantage of momentum and the clear path for the new user. Because these are the 2 advantages that let you know that not only is the market screaming up, but it hasn't hit anything to create a bounce. And when it comes from a termination condition that reverses the market, it's a strong bottom. No triggers through termination that reverses the market. Guys, this is just a termination condition. It becomes a strong bottom when it reverses the market. This is the best of the best. So then and only then do we turn our attention to the smaller, faster chart. And notice that the smaller, faster chart, the market is way up here, right? Oh man, I missed my trade. All I'm doing is I'm saying, where are my triggers? And what are the areas that might fall into them? And I'm not scared of that fib because areas are defined on the large chart. But what I need to do is I need to wait for the beginning of the pullback. I need to wait for a reversal bar on the smaller, faster chart. Because at the time of the reversal bar, guys, this is where you have to do a little bit of work. But this is where your rules are going to pinpoint exactly where the market is most likely to continue. So at the time of the reversal bar, this is not your entry. This is the signal of a pullback. And a pullback is nothing more than a small retracement in price counter to the underlying trend. The large crowd said up, fast, nothing in the way. The small crowd says, we want it to go down. We love the small crowd. They give us that push. So when the small crowd starts the push, you guys are going to look for your trigger lines. You see synthetics. These are the steps. These are the large trigger lines from the large chart, guys. If you put a circle on them, you'll see that circle around the triggers. The large triggers, the smooth ones, are native to the 5-1. These are what help define momentum. So I'm going to look for my trigger lines. And again, my trigger lines are not where the trade happens. My trigger lines are where I'm going to look for areas to be buried within. So I'll look from the highest point of support, closest to the reversal bar, and all the way down to the lowest point of support, the furthest from the reversal bar. But here's the key, guys, and it's all caps. I want those areas to be inside of favorable large triggers. Why do I want them to be inside of favorable large triggers? Let's take a picture of the picture. And I really want to cement this home because it's going to keep you guys out of a lot of problems. I expect price to go somewhere between the top trigger line and the bottom trigger line. The reality is I don't know where it's going to go, between the top of the trigger line and the bottom of the trigger line. So what I do is I give it something solid to bounce off of inside of those trigger lines. This is where your window of opportunity is created, from the highest point of support to the lowest point of support inside of favorable trigger lines. So not only am I wanting price to correct to the triggers, I want to give it something solid to bounce off of. So when you see these areas beyond the triggers, guys, this is beyond the correction point. This is beyond where we anticipate the market to go. This is not a part of your window of opportunity. So the triggers represent a correction point. The areas give it something to bounce off of. And guys, once you create that window of opportunity, the only thing left for you to do is right click 2 or 3 ticks above, 1 or 2 ticks above that highest point of support. Because remember, your large chart says odds favorable. Your large chart says clear path. Your large chart's coming from a strong bottom. We don't expect them to push that far. So just above that highest point of support, we're going to wait for the market to come to us, guys. We're going to sit on our hands, and they're either going to get us or they're not. There's either going to be an entry or there isn't. We're not in control of that, unfortunately. The only thing that you will ever be in control of is whether or not your rules are met. And if you get a reversal bar, you're going to identify your triggers. That's your red box. And if they're overlapping one on top of the other, you're going to look for your areas within, mid-band to the yellow 1-to-1s. And you're going to remind yourself that anything beyond the correction point, use the words correction point, is not a part of that equation. It's not where the market is most likely to continue. Your limit order goes right at the top of the window, a tick or two above that highest point of support. And we can make money both ways. So when we get a reversal bar and everything says down and there's nothing in the way, we're going to first identify our triggers. They should be one on top of the other, tight like snakes riding piggyback. And then I look inside of those trigger lines for a line, inside for a place to bounce. In this case, I only have a mid-band. This mid-band represents the point where the market is most likely to continue. Each and every one of these lines beyond the correction point is not a part of the window, not a part of the equation. My limit order goes a tick or two below the mid-band, and this is where I want to enter this trade. This is where the market is most likely to continue. And here's your 2-chart process. Let's do this one. It's cleaner. Everything starts on the large chart. And guys, this is how you're going to study. When the large chart says up, when the large chart has momentum, when the large chart has a clear path, your job is to look for a reversal bar on the smaller, faster chart. In the moment, we're just on this one bar, guys, and there is no tail. It looks exactly like this bar. If we get a reversal bar on the small chart, this reversal bar happens at the top of the most current bar. Going to identify your trigger lines in the areas that fall within. Your job is to place a limit order right at the top, guys, and hope that the small crowd can push back to your entry. And I want you to see something. From the top of the bar to Fibonacci resistance is still a pretty good distance, but from the entry point to Fibonacci resistance doubles the profit potential. If you go back historically, and here's your study process, guys. If you go back historically on a large chart, and you find odds favorable momentum, and I'm just going to use this one for an example. please don't get caught up in the idea of this because we're coming off the termination, but I want you to see something. If I circle a tail on the large chart, even if the small chart isn't perfect, I can go back to 9:34 in the morning and I can ask myself, did the market pull back to resistance inside of triggers? Did the market pull back to resistance inside of triggers? And what I'm doing is I'm going through historically, guys. I'm going through and I'm identifying where potential entries were. Whoops. So if I come down to this tail, you'll notice that it pulls right back to the mid band, right inside of the triggers. I should be taking those pictures. I should be looking at these potential opportunities. If I come back here, odds favorable and a clear path, and I circle that tail, and that was at 8:30 in the morning. Guys, this is the gold market. It goes a little bit beyond the correction point. I have to be okay saying, that's not my trade. We pull back, we look for that odds favorable, and we circle a tail. We're looking for our rules to be met. We're building trust in the idea that if we're patient, the market's going to give us what we need. And guys, this is just crude. This is just gold, but it goes directly back to a mid band inside of favorable large triggers. And this is what we're studying right now, guys. We're looking at the idea that with the advantage of momentum, with the advantage of a clear path, we can put ourselves in a position to take the highest probability trend trade, that we can become chart readers, that we can put ourselves at a place where not only can we study it to prove to ourselves that it's repeatable, to prove to ourselves that it happens on every market, that it happens on different time frames, but it's just a pattern. It's just a pattern that brings you success. And the coolest thing about this pattern is that when you understand where the market is most likely to continue, when you have that in your chart reading, you understand where the market shouldn't go. You understand that if it goes beyond the correction point, if it goes beyond the areas inside of that correction point, you no longer want to be in the trade. You're losing your advantages, and that's where your initial stop goes, 4 or 5 ticks above that window of opportunity, 4 or 5 ticks below that window of opportunity. So you're managing risk long before you ever manage reward, guys. Before you ever get paid, you're managing risk with trading with the direction. You're managing your risk by having momentum. You're managing your risk by having a clear path. And now you're managing your risk by entering where the market is most likely to continue. You're managing your risk by putting your stop where the market shouldn't go. And you're going to reduce your risk even further. If you get a reversal bar, you're going to be 2 ticks above it. And if you get a reversal bar, you're going to be 2 ticks below it, guys. And you can manage your risk down to a micron of risk before you ever collect profits on a trade. And the great thing is if that trade is part of the 20-30% that don't win on a high probability trend trade, because of your ability to understand where the market is most likely to continue, because of the advantages that are present, it's not unlikely for you guys to take 3-4 tick losers, $30-$40 in a lot of markets. But you have to understand that you're good at what you do, that you can pinpoint where it's likely to continue, and you have to be okay letting that stop get hit. You have to be okay taking losses, because losses are a normal part of a positive equity curve. And anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time, guys. But if you give yourself your first 30 days, or if you're trying to get back on track, give me 25 pictures of strong triggers and learn to trust that they push the market in the direction of the trend. Give me 25 pictures of weak triggers where they reverse the market and begin to understand that the advantage goes away. Give me 25 pictures of a clear path and watch that market continue, and give me 25 pictures of termination conditions and watch how the market bounces right off of these key Fibonacci areas that you knew about sometimes days in advance. Take pictures of the 50-50 look, because you are eventually going to start trading outside of the best, because you're becoming a chart reader and then pictures of your entries so that they become easy. And guys, you can get every one of these pictures without taking one trade. You could fill up this spreadsheet, I kid you not, with 2 or 3 hours of your time one day, going back, scrolling back historically, because the reality is that these trades happen on every time frame. These trades happen on every chart. You're going to see odds favorable momentum, whether it's the NASDAQ, the crude oil. You're going to see areas with the potential to break, but never broke. You're going to see odds favorable momentum with a pullback. What did that look like? Right to support, right inside of those triggers. And then you're going to recognize 3 divergences in the same price range telling you, stop hoping that that market goes up. Guys, this is every lesson that we talked about. Weak triggers, termination, termination, not broken, all the triggers above. I mean, my goodness, there's a pivot stop out at support. How many times since 9 a.m. has the NASDAQ put on an absolute clinic to help you stay safe, to help you stay focused, to help make sure that you aren't taking trades that don't have advantages? I love it when it happens, because the reality is, guys, it happens every day. It happens over and over. It happens on any market that you want to trade. Crude oil, S&P, guys, those are easier markets to trade in the beginning. You got it and posted the trades so we can crucify. I will never crucify you, Jen. We'll talk about advantages and disadvantages. I'll try to help you become a better trader, better chart reader. But guys, I won't crucify you. I'm the warm, fuzzy Novak. I'm high fives and hugs, unicorns and rainbows all day long. Promise you that. But I will say things that piss you off. I'm going to go ahead and warn you. So let's look at a plan. Mark, that's great, all these advantages. Well, how do I turn them into a trade? How did I turn it into a trade? Well, what I did is I took the accumulation of advantages, and that became my trade. And guys, Ron, too close to Easter, Ron. Too close to Easter. This is what I call the KISS plan. And this KISS plan is the Keep It Simple Sunshine plan. I saw Bobby lurking in the room earlier. Maybe he's still there. He gets 100% credit for the sunshine reference. This plan is a stepping stone, guys, in your learning journey. This plan is designed to optimize your chances of success with a high probability trend trade. This plan is designed to optimize your chances of success with those 50-50 trades, Kenny. I told you I'd give you a solid plan for it. But through simulation, study, class feedback, and continuous practice. And guys, that is highlighted because that's your responsibility. It's your job to simulate. It's your job to study, to go back, to take pictures. It's your job to post in the room so that you can get feedback. And not just post in the room, but post in the room and tell me why. And then it's going to be your practice that allows you to create your plan, that allows you to find the trades that speak to you, to take the advantages that you recognize and turn them into your best of the best scenario for success. Because all of this gets you to where you can find things that are repeatable. And that's why I'm so adamant about you guys not only annotating your charts, but annotating your charts truthfully. For those of you that got crucified yesterday, annotating your charts truthfully. Because if you tell me in your annotation that you had strong triggers, but the reality is that you had anything can happen triggers, what you're doing is you're trying to talk yourself into a trade. And if you told me that there were no termination conditions, but it was in fact a 50-50, then you're ill-prepared to manage the trade as a medium probability trade. So guys, I want you to focus on advantages. You will create your plan. Your plan will come from your ability to read the indicators, but your simplest plan for consistency, the easiest way to get to where you want to be, is don't fight the large chart initially, guys. Don't fight the direction. Don't fight the triggers. Don't fight the termination conditions. Just go with the flow. The large chart is the world's most profitable lazy river. Hop in your inner tube, grab a pina colada, and go with the flow, guys. It'll take all the stress out of it. And you're defining your entry. You're not defining Jen's entry. You're not defining Chris and Jamie's entry. You're not even defining Ringa's entry. What you're defining is Ron's entry, Cav's entry. And guys, nobody can hold you accountable to your entries but you. So make sure that you write everything on the chart. And then once you enter the market, one of my favorite phrases, and I haven't said it in a while, is that great entries create manageable trades, guys. Great entries create low-risk trades. Great entries create easier obtained profits. That wasn't even a word. But the same way that your entries should be mechanical in the beginning because you're learning to be a chart reader, the same way your entries really, if you do it correctly, eliminates opinion and emotion. Guys, let your management plan do that the same. Management's the hard part. Management means that you have to be a chart reader. Management means that you have to be willing to accept losses or smaller profits. Management means that you have to be active in the trade. And the easiest way to manage a trade as a brand new user is the same mechanical approach that you did to entering the trade. So everything is based on the correct entry for the new user with the high probability trend trade, and you will create a plan tailored to your personal goals based on your experience reading the indicators. And that stays true for your entire trading career. But your initial plan, this is a high probability trend trade plan for management, begins with the correct entry. It begins with getting in where the market is most likely to continue, and it begins with putting your stop where the market shouldn't go. And then most importantly, being willing to let the market come up and hit that stop. Being willing to not move your stops arbitrarily because of your fear, because of your anxiety, because of your emotion. And guys, when you start out and this market goes past the best entry and it gets right here, you're going to suck a pleat into your chair that's going to take a team of experts to get out. But what I see new users do is decide that they don't want to put all of the risk on the trade, that they're not willing to lose, and they put stops right here, only to watch the market blow through their stop, take them out, and then do exactly what it was supposed to do from the window of opportunity. And guys, I see this more than I care to. So understanding where the market is likely to go, where it's likely to stop, and being willing to allow the market to be wrong, being willing to have that cost of doing business, because anything that wins 70 to 80% of the time, it's gonna lose 20 to 30. Guys, if you take 100 of these trades, you have to be prepared to lose 30 of them. And if you focus on the execution rather than the result, the results tend to follow. But the great thing is, with all those advantages, you end up with a reversal bar more often than not. And that's where you start to reduce your risk even further. That's where you go about 2 ticks above that reversal bar for the short trade. Your targets are predetermined. Your stop is now reduced risk, and there's nothing for you to do. Roll back from your desk, guys. You can't make the market do anything, so just sit on your hands. You either take a smaller loss, which is okay, or it hits your first target. Your first target is $100. But Mark, it's only $100. If I handed you $100 at the Quickie Mart tomorrow, you'd be stoked. You're $100 richer. $100 every day for a week is $500. And that's a $2,000 month. And the crazy thing is that $2,000 month results in $24,000 additional income from only making $100 a day. Well, you're trading a 2-lot. Hit $100 on both contracts. And then suddenly that's a $48,000 addition to your year. And guys, I want you to think like that. The goal is to get paid. But Mark, I hope it goes to the areas beyond. Your goal is to get paid. Your goal is to do this well enough so you don't have to go back to work, guys. And $100, money in the bank, confidence, and you're going break even. And this is where the phrase, you will, whoops, I don't want that one. This is where the phrase, you will craft a plan tailored to your personal goals based on your experience reading the indicators comes into play. Because the break-even stop is not the best stop. And it's going to get hit every now and then. And if it does, you're out of the market. That's it. Game over. $100, we have to wait for the next trade to happen. But the cool thing is that with all that momentum, with a clear path, with the best of the best entry, hitting that second target becomes not too terribly difficult. And if you hit the second target, well, now it's a $300 trade, guys. And $300 a day, if that's the best you do, well, that translates into $72,000 a year from the most conservative approach that you could possibly take. Turn that 2 lot into a 4 lot, get into 6 figures. But I want you to see something. If I don't wait for the pullback and I get in down here, my risk is still all the way up here. If I don't wait for the pullback and I jump in, and I see this a lot, below the triggers instead of at the area, I have to go even further in this move to hit my goals. If I move my stop too soon, fluctuations on the small chart are going to take me out before I ever hit my first target. If I move my stop arbitrarily, fluctuations on the small chart are notorious for stopping you out only to watch that market go to your next target. So guys, great entries really help in creating the ability to make money. Great entries take a lot of the trouble out of the scenario, and keeping it mechanical and methodical in the beginning, it helps eliminate that emotion and those desires to arbitrarily move stuff. So guys, that is your high probability trend trade. That is the beginning. Are there any questions? Are there any questions about momentum? Guys, if you're struggling with catching momentum, I want you to take the new page on the spreadsheet, and I want you to fill it up with pictures of momentum. And if you're not sure if you have it right, I want you to drop those pictures in the room. And if you're struggling, I can't tell the difference, Mark. I keep annotating charts where I have momentum, but I really have weak triggers. Then I want you to go back and take the pictures of the weak triggers. And if you're not sure, I want you to start comparing the two, because this is clearly strong. And if I go right next to it, well, that is clearly weak. And they look very different from one another. So if you're taking a momentum style trade without momentum, are you really taking a momentum style trade? If you're taking a high probability trend trade, air quotes, without the advantage of momentum, is it really a high probability trend trade? It still might be a fantastic trade, but the second you go outside of high probability, guys, it's imperative that you understand that your management needs to change as well. So that first medium probability trade, that 50-50 trade, guys, that one area with the potential to break trade. And I'm going to go back to my little slide ruler that I make. Guys, make yourself one of these, even if it's on a piece of paper in front of you. Write the 3 advantages. Write momentum, clear path, and an entry area on a piece of paper. And if you give up momentum, cover it. And train yourself to insist on a clear path and an entry area. And if you cover up clear path, like the 50-50 does, it takes that away, well, this KISS plan keeps you focused on momentum and an entry area. And that's exactly how we take our ability to read charts to take the perfect entry on the 50-50 trade. And what we do, what you're going to do, there's no we. I don't know why I keep saying that. I apologize. I'm not trading for you. When an area is not broken, my path isn't clear, right? So I have to make sure that I have momentum. Odds favorable on the 13-2 and the 5-1. Smalls outside of the large, separation on both charts. And then it reminds me that divergence is a loss of momentum. Guys, this is the best, the easiest, the most profitable way to take a 50-50 trade. Don't trade against divergence. More often than not, it'll kick your ass. And then make sure that it's from a good top or bottom. If it's not, the 50-50 trade is less likely to work. Why is it less likely to work? Because it wasn't a decision-making point that reversed the market. This is not a termination that reversed the market. This is a 50-50 trade. This is a 50-50 trade losing. It's a great look. But you do have split triggers, not one on top of the other. And I noticed that you said that you broke your rule. So guys, we're going to talk about split triggers today too. And Haji, thank you for the example there. Not from a good top or bottom keeps you out of that trade. Remember, you will create a plan based on your ability to read the indicators. But until you're winning more 50-50 trades than you're losing, doesn't it make sense to kind of ride the coattails of all the study, the 27 years that Nexgen's put into recognizing patterns? But if you're marking yes, guys, get in at the area. And then it reminds you for the second time, divergence, no trade. And then when you get to management, it's not a high probability trend trade. The management will be different. You have to know what you're getting into to know how to manage. So the stops are the same where the market shouldn't go. The stops are the same above the reversal bar, below the reversal bar. And then it reminds you for the third time, if divergence prints, exit the trade. You'll change their divergence requirements eventually, maybe if it's coming from a good top or bottom. Still quick profits, $100 are at the first trouble spot. Guys, it may be a $50 first contract. And then you're going break even because it's not a high probability trade. And then your second contract, you're making quick profits. Guys, get paid on these trades. So your KISS plan, and I'm going to drop this in the room, is designed to optimize your chances of success. Guys, if you are spinning your wheels and you're finding that you're taking more losers than winners right now, going back to the KISS plan's never a bad idea. Why not just go back and reaffirm the idea that advantages pay the rent, that advantages set you up for success, that having the best of the best is the easiest way to capitalize on profits. And then I'm also going to give you a trend trade checklist. So as you focus on the high probability trend trade, this is not only what you're looking for, but also what you should be writing on your charts, reinforcing the rules, talking about what it is that you're looking for. So I'm going to drop that in there. Never had anybody use this checklist truthfully and do worse than 70%. And I'm also going to give you, oh my gosh, so much stuff for you guys, the exact same checklist, but with pictures. What is a strong top or bottom? And this is funny because people ask me about strong tops or bottoms every day. Strong top or bottom is a termination that reverses the market. Odds favorable, anything can happen. We're just both sides of the coin, right? Termination condition. This is what a clear path has to look like. That's a 50-50. And then defining your window of opportunity, where your limit order goes, where your stop goes, what you're waiting for, order of operations. Guys, everything that you need to be successful is provided in this classroom. Everything that you need to become a confident chart reader, to become a confident day trader, to have the ability to win more than you lose is provided in this first moment of class, this first hour and a half of class. To get there quickly, post your trades, use the spreadsheet. Guys, these are two very important tools that are very often neglected. Learn the rules, learn what they say, learn what they look like, speak to yourself in terms of advantages. Don't talk about, I took a long trade. Talk about, I had momentum, a clear path, and an entry area. Therefore, I was obligated to take the long trade. Practice, 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 practice. Be okay with losing. Be okay with making mistakes. Guys, my job is to work through mistakes with you. And if you don't present, I can't work through those with you. And then keep it simple in the beginning, guys. Keep it focused in the beginning. There's a million trades to be had. There are so many ways to be profitable with this software, but it all stems on your ability to be a chart reader. And if you omit that one step, you're going to spin your wheels a lot longer. Anything can happen triggers. Loss of momentum. No areas inside of favorable large triggers. How many red flags do you need before you don't take the trade? Directly into Fibonacci support. No triggers through. Happened here. Happened there. Are you going to believe it when it happens here? It might break, but the reality is you don't know. It might have broken here with odds favorable momentum, but it didn't. It might have broken here with weak triggers, but it didn't. It might have broken here, but it didn't. Are you willing to bet the farm that this is the one time, right? This is the one time out of the last 5 that termination conditions didn't stop the market cold. This is where you've got to convince yourself that your rules are designed to keep you safe, guys, and that's a great example of it. And this market has a good chance of breaking it with momentum, But that good chance doesn't pay bills. Let it break. It's okay. You're all young. You're going to do just fine. So are there any questions about the high probability trend trade? Guys, I've got to go wet my whistle. I'm going to stretch my legs. I'm going to step away from the computer for a second. I'm going to encourage you guys to stand up, wiggle your fingers, tap your toes, bend your knees, do a couple side bends. Stop trying to fabricate trades. Take a break. When I come back, we're going to look at your charts. We're going to look at everything that you guys have posted in the room, and we're going to revolve them around entries and exits. And we're going to talk about whether or not you had advantages. We're going to talk about where you got in. And just because it doesn't fit high probability trend trade doesn't mean that it's not a good trade. But I'm obligated, because this is a class for the newer users, to talk about those advantages every time. So don't get your feelings hurt if I go, man, you might have gotten lucky, especially if you don't tell me why you did what you did. So share your chart read. What kind of trade is it? What were the advantages? Where did you get in? Where did you get out? Give me the opportunity to hold hands with you for a second and hopefully help you become a stronger chart reader. So I'll see you guys in 5 minutes. We'll watch crude oil, see what it does. When I come back, we'll start clicking on all your charts, guys. Back in a few. All right, guys, let's get into the second half. This is going to be a one break day kind of thing. I'm going to scroll up to the very top of the chart or to the chat room, and we're going to take a look at what you guys have posted. We're going to talk about it in terms of advantages. We're going to look at it so that you guys understand the chart reads involved. I will tell you that crude oil right now is in fact a 50-50 with a divergence. But MBiota 333 got us going, and it's kind of cool. So MBiota put this chart in yesterday at 3:53 p.m. Guys, no class, nothing going on at that time. But one of the amazing things about the internet and video and all that wonderful stuff is I record each and every classroom. It's available to you on YouTube. So if you take a trade and you want to drop it in the room, maybe you can't be in class because of other obligations, I will analyze your chart. So let's go through, and I like to be as thorough as I can because he doesn't have the opportunity to ask questions. But I love the annotation. Odds favorable momentum, and he even pointed out the separation between the triggers. That's awesome. The one thing that we don't have on this is whether or not it's a clear path. That's okay. I can do the chart read. I just want to make sure that you guys can do the chart read. The mid band is not behaving as a termination condition here because the large triggers are not a full bar away. So what we have is odds favorable momentum and a clear path. Enter an area inside of favorable large triggers. My favorite annotation ever. And the one thing that you can't see, and I put this request out there for you guys, show me the whole chart. Give me the whole picture. It helps. The one thing that you can't see in this picture, but I can see just barely, is that the synthetic triggers are all the way up here around 86, which means that there are two correction points. There is a correction point here, and then there's also a correction point up here. And the reality is I don't know which correction point it's going to go to. So it doesn't mean that this isn't a great shot at the trade. It doesn't mean that this isn't a good first attempt. If the line here inside holds, it's outstanding. But you have to ask yourself in this scenario, am I going to put my stop up here beyond those synthetic triggers? Or am I going to put it here and say, if it doesn't go from the lower area, I'll take a small loss and potentially look for re-entry. And this is one of those decisions that you're going to have to make based on your chart read, whether or not it is in fact favorable large triggers, or whether or not it's what we call those split triggers, where the large and the synthetic are not on top of one another. One of the things that we've talked about in the room a lot is, since you don't know, if you have those split triggers, is there anything wrong with waiting for confirmation on the trade, right? Maybe a reversal bar coming from the synthetic triggers, coming from the large triggers, coming from, and what you'll find a lot is waiting for a little bit of confirmation when the triggers are split. It buys you a little bit of patience. And this is, I want to go back to Haji's because this is such a great annotation. It's really nice, everything about it. He had the 50-50. He didn't have divergence. He had strong triggers, but he noticed that his triggers were split. And when they're split, you're not getting an agreement quite. So on the split triggers, this is one of those instances where waiting for that confirmation. It may go here, it may go there. You do have areas your stop is appropriate, but when they're split like this, something isn't right, right? It's not the best of the best. It's okay to look for that little touch of confirmation. So MBiota, I hope I'm saying that right. I hope that's helpful. I hope you're watching the video and you're getting these lessons. And then guys, of course, I want you to know you can always reach out to me via direct messenger. You can always reach out to me via email. My only request is that, guys, don't only post to my direct messages. If you need help and you're in class, please post in the room. Remember that I actually every now and then have a life outside of here as well. And all of the feedback does come from my personal time, which I'm happy to share with you, but not because you're not willing to post in the room, because maybe you're afraid of feedback in a public forum. I need you to work through that just a little bit. Here's Cav. Market's coming from a good top, he says. And I remember that. It was very much. The small triggers are below the large on the 13.2. I agree with that as well down here, as well as up here as it's looking to break through the area. Cav took the first short somewhere up here. I don't see the entry, and he got paid at it. Very nice. And then when it had that clear path, when everything was down, when he was coming from that resistance, Cav says, wait a minute, my smalls are outside of the large. That's odds favorable momentum. And he jumps in. He gets in. It starts to come up, and Cav says, man, I'm going to see if all that momentum carries me down. And this is one of those instances. It's a great trade, right? You have momentum. You don't have momentum here. Well, maybe you do. It's hard to tell. 43, 43. Yeah. We're right at the beginning, so that's a good look, right? Odds favorable confirmed. And guys, when you're showing me momentum trades, make sure it's momentum on both charts. And then Cav knows, because he's a chart reader, and this is pretty cool. Cav knows that if this momentum trade isn't working the way he wants it to, that the next one in line is a high probability trend trade, which means that he knows exactly what he's getting into and where his stop should go. And I think this is one of the most important things. And I took a picture yesterday for somebody. You guys that love momentum trades but don't know how you're going to manage it, that's a momentum trade. And guys, really good momentum trades have areas. There's a lot of people jumping in. Do you know how to manage it if you just jump in? Where are your stops? And on that same idea, if divergence is a loss of momentum, man, I'm entering on an exit condition, if that makes sense. I'm entering on an exit condition. But one thing that happens, guys, is every momentum trade that fails, there's typically a trend trade opportunity right behind it. So are you going to hold on for dear life? Are you going to fight that loss of momentum? Are you going to do all those things? And there is no right answer. There is no wrong answer. There's only your answer. You have to decide. But I will bring this up. If you're taking a momentum style trade and divergence is a loss of momentum, well, then you know that you're sacrificing a little bit, and you might have to be willing to accept a little deeper retracement. And this is where I love to see, and this is just me, and I'm not trying to tell you guys what to do, but I had a trader in here that when he takes this style trade, he waits for the bar to get below the bottom of the previous bar to say, hey, look, your momentum trade is in fact going in the direction of the trade. And guys, I'm going to tell you right now, I learned from you guys as much as you learned from me. And that, in my opinion, is brilliant, because couldn't divergence just push it up? So why not let it start going back down in the direction of the trade? Just a thought, Cav. I hope that you heard that, because for me, that blew my mind when I heard it. I was like, okay, I've lost momentum, right? I'm on the wrong side of the smalls. Why not let it head back in the direction? Why not let it tell me that it's pretty stoked on finishing the move with the large chart look? So great job, Cav. Nice trade. Actually, two nice trades in there, because I know where the first one came from. And then you get a termination condition, and it reverses the market. Strong bottom. Heck yeah, Cav. Good one. Odds favorable. And you do have split triggers, and Cav says because of the termination condition, and I love this termination condition, because of the roll of the triggers, because everything is freaking green, because there's no divergence, because there's strong triggers, Cav says, you bet I'll take that mid-band here. You better believe I'll take it at the first correction point, because I can't find anything wrong with this trade anywhere. And great job on that one, Cav. Another beautiful trade. And great annotation. Thank you. Just solid trading, guys. Termination creates the reversal. Reversal creates odds favorable. So Cav says, let me look for an entry. And sure enough, he found one. And then we get a 50-50 with divergence. And you just got run over. So let me get back to the bottom, guys. I want to go back and forth on these, and I want to give everybody the most thorough feedback that I possibly can. Couple different things on this 50-50. One of the things that we say a lot on the 50-50 is let it smash. Is let it smash through the area. You've got a way better chance of that area breaking if the small triggers are 2 to 3 points above. And on the NASDAQ, that's even 4 to 5 points because the points are closer together. That's the first thing I see, is they're kind of peaking, not smashing. But it's still a good look. It is momentum. It seems to be accelerating. And then when I come to the smaller chart, I notice that the triggers don't break. I notice that divergence prints. And that's a rough look, guys. And for me, that's an exit condition. If I were in a long trade, that would be an exit condition for me, divergence directly from a Fibonacci area. And let me go back and let me share a couple things off of that slideshow that I run, because we're going to talk management for just a second here, guys. And I want to give you a little bit of insight, and I hope that this is helpful for you guys that are taking these into the moves. Yeah, and Cav, I think one of the biggest things is the large chart leads the way, and you did a great job of letting the large chart lead the way. But there are indications on the smaller, faster chart that are considered exit conditions. And this was a conversation, my brother and I talked for about 30 minutes on it a couple weeks ago. And you have to ask yourself, if my small chart has given me the reason to exit a trade, do I want to enter the trade, right? So if I get a second lower divergence on the small chart, and we see this a lot, you guys on those 50-50 trades. If I get a second lower divergence, that's an exit condition for me. That's written into my management plan. So if I go long here and a second divergence prints, I'm obligated to exit that trade per my management plan. So what that means to me is when I exit that trade, I'm not going to just jump back in at support. What I am going to do is I'm going to insist on confirmation. If I go long and a second divergence prints, I'm only going to re-enter if I get that reversal bar in the direction of my trade, if I get that confirmation. And then what happens is if that reversal bar never prints, I never get run over. And guys, the idea of confirmation is huge, right? That's your short and it's perfect and it's a 50-50. And then divergence prints and a second higher divergence prints. And you're saying to yourself, you know what? The large chart still looks great, but I'm going to insist on confirmation. And if I never get it, well, then I never take that trade. So these are just some management ideas, but I think that it pays dividends if you're looking to take that trade at the end of the move where a couple divergences have printed. If you're looking to take that 50-50 where a couple divergences have printed, you can say to yourself, man, this isn't my best look. That's a reason to exit a trade, which should be enough to keep me out. If I go long, taking profits at 1-to-1s on the small chart, guys, it's never a bad idea. And then if divergence prints from a 1-to-1, this is a get the hell out and wait for confirmation. So if I'm looking for a 50-50 trade, but divergence prints from a 1-to-1 into it, guys, that's a huge red flag. I'm not taking it. If an exit condition happens right before an entry, do I really want the entry? If I'm short, and then here it is right there, if a reversal bar, an up bar comes straight from the area, especially with divergence, that's enough to keep me out of the next short. And Cav, this one is what yours looked like, and that's what made me think about it, because I knew that this picture was in here. But guys, if that's an exit condition, if that's a small chart exit condition, then it stands to reason that it's enough to not take that next one. Does that help, Cav? And I really didn't plan on turning that into a lesson, but I saw that and it triggered that picture in my head. Because I know a lot of traders that take brilliant trades to the areas and then they give a lot of it back, trading directly back into that area. And then Cav, just one more thing on this one that I did want to cover. And I know that I've covered this before, is you're in at, I can't see where you're in at. Hold on. Let me see if I can blow this one up. You're in up here at 88, and your one-to-ones aren't until 85. You're 3 points above the area, and I'm assuming it's because you don't want to miss the trade. But when you get to the area, and especially on this NASDAQ trade, your large triggers are already against you. Your large triggers are already starting to come down. And guys, this is where areas are important, especially if it's not a perfect trade. Give it that bounce point. All you're doing here is multiplying your risk, and all you're doing here is minimizing your profit potential, because your first trouble is now 4 points away instead of being 7 points away. Does that make sense? So especially on these medium probability trades, man, great entries give you at least a shot. And then that little NASDAQ thing, guys, when those small triggers come down against you, you get to support and they're less than a full bar away. I can't say this enough. I say it every day 1,000 times. Don't fight the small triggers, NASDAQ traders. You almost never win. Almost never win. But the cool thing is if you wait for a close on the correct side and everything is still good, it opens doors for you and you start capitalizing a little bit. And then let's see what happens here. Termination, just barely peeking through, divergence from the line. And then Joel, you chose not to take the trade. And then there's that second lower divergence, which is even more of a little bit of a red flag. So if you were going to try this one, you'd have to get that confirmation. And then that second lower divergence was enough to kill it, right? And then we start getting strong triggers, and then we get a clear path and one divergence and a pullback right to resistance inside of favorable large triggers. And that feels pretty good there. I kind of like that look, Joel. Did you take the trade? Did you get short? Or did you wait for a close on the correct side? Because guys, look how those small triggers behave to support right off the midband. Do you see it? The small triggers were closer than a full bar away. Does everybody see the bounce there that happened? You NASDAQ traders, this is the one that nobody wants to wait for because it means that we might miss the trade. Look at how price came to those small triggers and bounced, and the market continued up. This is why we don't fight the small triggers on the NASDAQ, because the NASDAQ, guys, their small chart on the NASDAQ is a 13.2. It's the large chart on the S&P. It's the large chart on crude oil. It's the large chart on gold, on the Russell. And Cav said, dude, I'm not missing that one. Termination, odds favorable, perfect entry. There's your second higher divergence once again. And then it pushes up a little bit higher with the second. Split triggers, it goes right to the second trigger. Cav says, I know where the market's likely to go. And then you got out. I like that entry a lot better. You're using the triggers, but the midband was right in front of the correction point. You knew where your stop had to go. Second higher divergence says, watch out. And you said, I'll go ahead and manage as I get back into the trouble spot. Nice job, Cav. Putting on a clinic today. All right, Miss Jen, resistance, triggers apart, they're strong. The path is clear. You sold at resistance inside of favorable large triggers. You sat through the pullback, and then you sold at support, or you bought at support actually. And then Jen and everybody, not just Jen, are you getting the lesson here? When your correction spots begin to separate, you're okay, I was with you. It creates indecision. Where's it going to correct to? Well, it corrected to the first one, and then it corrected to the second one. And this is something that you have to be ready for. You have to be prepared for that indecision. You have to be prepared for that wonkiness. Large chart always looked great. But guys, your small chart, when these correction points are separated, there's a good chance you're going to have to sit through that stuff. And it's really going to test your trust in the large chart. Nice trade. And then no trades, termination to termination to termination. And Jen, you just said, hey, how about if I don't risk my money on the maybes? It's just a fight, Rob. That's all it is. But so, Rob, do you remember the lesson where I said that the triggers are moving averages? The triggers are moving averages, and price likes to correct back to a moving average. Does that make sense? So what happens, and let's do this, and I'm just going to make this up on this one. If I have one moving average up here, and I have one moving average right here, well, then what happens is that correction may go there, and then it might push, and they might say, oh, you know what, I want to correct up here, and it might push. And the reality is you're just not sure. You're not sure where it's going to go. That little bit of indecision takes away a little bit of advantage, and you have to be willing to sit through the nonsense the further apart your correction points are. So Jen, you get a gold star for your patience. Nicely done. And then Haji, strong triggers, clear path. Divergence? Who cares about divergence? What a beautiful trade. It was easy, wasn't it? So guys, I'm going to share with you right now, if you don't steal this picture, if you don't take this picture and drop it into your favorite looks, I'm going to put it in my section. But if you don't steal Haji's absolutely picture perfect, nothing wrong with it, holy smokes, I could teach a class with it picture, well, then you're kind of doing yourself a disservice, because Haji just gave you the perfect look. Haji identified all the rules being met, and absolutely beautiful acknowledgement of why he entered where he entered. Gosh, I love this trade. And then Haji, here's something to think about. With all of this momentum in this clear path, your first trouble spot, if you're not just going for $100, is this pink line. And with all of this momentum in a clear path, man, you're more likely to get to that pink line than you're not. And this is where I don't get caught up in the fluctuations. And I don't think you did. That looks predetermined. But that's where there's a little more meat on the bone. And the cool thing is this pivot right here, great place to move your stop behind. Well, with this look, and guys, this is why you have to know what you're getting into. Is there anything at all that you can come up with that says that market's not going to continue up in the direction of the trend? I mean, there's nothing, right? It hasn't hit anything. It's cleared everything. It's screaming like a banshee. So doesn't it stand to reason that if this is a pattern that wins more than it loses, if this is a pattern that repeats itself over and over, you know that your expectation is at least the one-to-ones, which means that if there's a speed bump on the way, Well, that becomes your first trouble spot. Does that make sense? And this goes back to the idea that you will formulate a management plan that suits your needs based on your ability to read the charts. So Haji, I love everything about this. Getting paid on this trade, man, I will never fight you on that at all. But one of the great things about this class is that when I see the perfect trade and nothing but advantages and it's just beautiful for days, I'm going to remind you that there may be an opportunity to make just a little bit more money. Not that, what is that, 05 to 95 to 06, that's 11, that's 220 per contract. That's a $2,500 trade. Maybe I shouldn't tell you. The money's going to ruin you, Haji. Beautiful trade. And guys, that's the easy trade. And Haji, if that was the only trade you took today, if that was the only trade that you took today, that's a pretty good day. Trigger strong, odds favorable, perfect entry, out at the first trouble spot, if you did, right? And then it pulls all the way back to support. You got caught in a little indecision, but you said, this says we're still going. Tell me if I'm doing this right, Jen. Odds favorable, clear path, perfect entry, 2 divergences. You're like, it's probably going to push back, but who knows? And then third divergence, you're willing to exit. It never reached it, did it? It's not obligated to. Your small chart told you that it wouldn't. That's the beauty of it, is your small chart told you that they weren't going to hit it right here. And Haji's going, man, my exits looked brilliant. And they did, Haji. But you never know, right? So Jen showed how it can be done when you trust the large chart to get there. And when you understand that this support based on this look is still likely to hold. There were great trades from both of you guys. But remember that the goal is to get paid, right? You apex traders. So I want you guys to think about this. And this is 2 different ways. This is the, I'm trading my own money and I'm willing to risk drawdown based on that look. Does that make sense, everybody? I'm trading my own money and the large chart said that this support's likely to hold. I'm going to hold on until there's a reason to exit. No, Jen, I think it's beautiful. I think it's beautiful. This is the my money trade. This is the I'm not worried about drawdowns trade. This is the I trust the large chart trade. Haji's, this is the Apex trade, ladies and gentlemen. And Haji, I don't know if you're on Apex. Apex says get paid. Apex says don't suffer drawdowns. So what happens is Haji just gets paid and his drawdown doesn't blink and it's beautiful. And Jen, the only challenge is that if this goes down and takes you out of this trade down here, where's my arrow? And you end up losing money, well then your drawdown just went down with you. So even though you were up $500 or $600, they're calculating your drawdown, your trailing threshold from that highest point. So if you hold on to that trade for dear life as an Apex trader, they punish you severely for it. And you'll find yourself blowing out without ever getting close to that $2,500. So guys, management's got to be up to you, but understanding the rules that you're playing by helps as well. So if you know you're an Apex trader, if you know that they don't like drawdowns, if you know that they're going to punish you, if you hold and lose, well, then it makes sense to trade accordingly. Something to think about. And then strong momentum, both down, sell at the midline, and bought at support. And Jen, was this you as well? cool. Yes, sir. That's my dad. Did you have a good top? I want to go through the whole chart read. Bad top. So 50-50s are less likely to work, just in the general scheme of things. Does that make sense? So if I know that it's a bad top coming into it, then I know that this look is less likely to work. I also know that divergence removes an advantage on a 50-50. I also know that not having areas inside of favorable large triggers pulls away an advantage on a 50-50. Does that make sense? Not only do I not have a correction point here, but I'm on a less likely to work because of the bad top. The momentum is great. But what you run into, Jen, and again, this one worked out beautifully. It really did. You waited for both charts to get through support. So where was your entry? Because at 60, oh, so we're all the way down here. So your entry's down here, not where your blue arrow is. Is that right? Whoa, that's a whole different chart read. So let's do this. Anything can happen triggers. Right? So no momentum. That's okay. Because what did you have? You had a clear path. You just told me that. But do you see how pointing here is going to make it hard to study this trade tomorrow? So I've got anything can happen triggers, which means that I don't have the advantage of momentum, which is okay. That's not a deal breaker. Life can still be good. And I do have a clear path, and I love that. So this is where I start to focus on my entry area, because what does anything can happen mean? Anything can happen means that anything can happen. So what I run into, Jen, and maybe you'll agree with this, maybe you won't, it's okay, is that midline may hold, right? It could. It certainly could. But it could also push up to those yellow 1-to-1s. It could push up to these purple 1-to-1s. It could push up to that mid band. It could push up to these fibs. It could push up to here. And I just have to accept the idea that without a clearly defined entry, I'm hoping that a mid band, that a little pink line floating in the middle of nowhere stops that market cold. Does that make sense? This is where I love the confirmation. This is where I love, you know where the first spot has the potential to continue that down. Her entry is right there, set of the midline, right there. Right there. So it's a brilliant read. Oh, the Midland? It's by Odessa. It took me a second. I got it. It took me a minute. So what I'm saying is that anything can happen triggers. I know it can retrace further. So why am I saying that? I'm saying that because I want to understand my advantages, and I also want to understand what the potential is if the advantage is gone. So, and Jen, I love your trade. But if I understand, and this is for the classroom as a whole, if I understand that anything can happen triggers can cause a further retracement, well then now I've got a pretty good idea of how I need to manage my entry. And you'll notice that the area that all the triggers were below, your clear path is on the reversal bar that gets you in. So you know that you're going to have to make a decision. And this is where I just simply say to myself, I don't know if it's going to be here or here. I don't know how much momentum they're losing. I do know that my smalls are inside of my large. I do know that I have divergence and my smalls are right there up against my large. So with all this momentum loss, I'm not sure just how far the opposing force is going to be able to push it. So what I do is I say a little confirmation goes a long way, and you're going to pay a little bit for that confirmation, Jen, but you're not going to get run over at a mid-band if it ends up going up higher. Right? 50-50, divergence, split triggers. Even if you waited for confirmation, it still gave you a fighting chance. So sometimes you just don't know. There's your mid-band in the middle of nowhere, right? And this one had odds favorable momentum, but when it's not perfect, it's okay to say, let me get just a little bit of help on this one. Let me get just a little bit of goodness that makes me feel comfortable with the trade that I'm entering. Or you may have been completely comfortable anyway. And Jen, one time where I'll sell that mid-band all freaking day is if this market is 40 bars in a row, breaking through areas, strong trending market, I'll keep selling the mid-band until it doesn't work. But if that's not the kind of day it's been, I like a little extra. So I hope that's helpful. All right, GWC. Termination, reversal, 50-50, one divergence on split triggers. You get out at the trouble spot and don't even hang out to see what happens next. I love it. GWC, this is beautiful management. You do have the split triggers, which means that there is the potential that it will go lower to those synthetics. So I'm not sure where your stop was, but it's a great look. And the fact that you identified the trouble and didn't hope that everything broke, you just said, you know what, I'm going to get paid, and then I'm going to wait for the next best opportunity. Great trade, GWC. Solid work. Zorro. Awesome. Zorro taking the momentum trade, right? I know you love those momentums. One of my favorite looks on the momentum trade. And first of all, let me say, holy smokes, what a beautiful look. Holy smokes, what an amazing look, right? Guys, there is nothing that makes me happier when you show me momentum on all three charts. Zorro, this is a momentum trade. This is the best of the best. Guys, if you're a momentum trader and you don't have three charts with odds favorable momentum, the likelihood of your momentum trade working goes down. Zorro, the only thing that I can say about this one, and I don't even know that I'm going to call it a problem, is when you see this breakout look, a lot of times it pulls back and then goes right to those areas that are broken. So if you get in up here, the only thing that I'm going to say is you have to have a stop placement in mind, if that makes sense. But I want to show you a pattern, Zorro, because I know that you have these trigger lines over here. And I see D-Rock in the room, and D-Rock will confirm this one. So check this out, Zorro. Large chart says scream into the upside, odds favorable. Small chart says scream into the upside, odds favorable. Small triggers breaking through the problem area. I want you to pay extra attention, Zorro, as you take these trades to this pattern right here with odds favorable momentum, one down, one up. That is your pattern on a market flow chart with the strong triggers, with the faster triggers. Odds favorable, one down, one up. But you only take that one when this chart says up strong, when this chart says that the small triggers are through the area. That's the pattern right there. Zoro, this is a beautiful, beautiful trade. But if you wait for that down bar, you'll actually find that you're getting in closer to that support. You're getting in closer to those one-to-ones. And then your risk goes behind, since we're doing the full tilt boogie here, is this bar, the next bar, the up bar, will have a box where it shows you the range of the bar because it's an 8 range. And your stop is going to go below it. And what's cool is as the market continues up, as that market continues up, so does the box. And you can literally actively reduce your risk behind. Because if you get a second down bar, chances are the momentum trade fails and you've got to be prepared for the high probability trend trade. Does that make sense, Zoro? Study this pattern. You'll love it. And it'll also help you define your stop placement as you go through. Crude charts are working. NASDAQ charts are frozen. You've shut down Ninja, rebuilt, work. Gary, are you in here? There's the NinjaTrader 8 install file. Repair. Close everything down and just run the repair on your Ninja and see if that helps. I did it this morning. All right, Jen. One divergence, just a loss of momentum, hits the mid-band, large triggers a full bar away, and then it comes back into that support, the one that had already broken. Nope, you don't need to go to look up two messages. There's the install file for you for NinjaTrader. You don't even need to go to the website. Just run that file and hit repair, and it'll repair anything that may be a foul in NinjaTrader, and then just open up and go. You don't have to rerun indicators and workspaces and all that stuff. That'll just put a patch on anything on Ninja that may be problematic. 1510, 1510. All right, so not a termination that reversed the market, but this certainly is. So that's a strong bottom. And then it gives you odds favorable. And then that odds favorable, you get a pullback with strong triggers right to support. And oh my gosh, Jen, that's an easy trade, isn't it? That's like sunshine and rainbows. And then NASDAQ traders, can we talk about a little NASDAQ nuance? And I want you to see this, and I think you'll dig it. Maybe you will, maybe you won't, maybe you'll listen. So Jen, I want you to see something. Raining in the UK, isn't that like saying it's Tuesday in the UK? We are led to believe that you guys get an awful lot of rain there. There's United States re-education camps where we say the UK is always raining. I just can't do it. I'm a sunshine kind of guy. So guys, let's talk NASDAQ real quick. And Jen, you gave us the perfect picture of two scenarios in NASDAQ. And guys, for all intents and purposes, we're going to say rules met 100%. Large chart, because we're not even looking for an entry if they're not, right, everybody? Why on earth would we look for an entry if the rules aren't met on a large chart? So I want you to see these two scenarios. Here's your first scenario. Looking for a but here? No, there is no but. Your trade is beautiful. Your trade is amazing. Your trade is everything that I look for in a trade. It was strong triggers. It was a clear path. It was a pullback to the area. Jen, you couldn't have done this better. I could hand you the microphone and you could teach the class. Did you save it? I don't know, Gary. This is where you have to get with Jason. I'm not sure what's going on your computer that made that error. And for those of you that don't know me well enough, I'm not a tech guy. I can do very basic things that my brother or Jason taught me. But if you run into anything outside of my scope, I'm going to respectfully divert you to Jason, because what takes me an hour to figure out takes Jason 2 to 3 seconds. But the flip side is I can fix damn near anything mechanical, but it has to have spark plugs. It's easier to pass the buck. Man, you know what? Are you guys familiar with the Peter Principle? We all excel and advance to our level of incompetence, and tech is my level of incompetence. So while you think it's a good idea to promote me, it's not. I'll ruin your business. All right, let's get back to the NASDAQ lesson. 100% met on both charts. So I want you guys to see the difference in entries. When price reaches this midband, look at how close the small triggers are. This is the first one, guys. When price reaches the first area, look at how close the small triggers are. So this is the one thing that I say every day to my NASDAQ traders. If the small triggers are less than a full bar away, they may act as resistance. Wait. And then guys, there's Exhibit A. Look at how they acted as resistance. Does everybody see it? You guys that are getting run over in the NASDAQ over and over, you guys that are taking just absolute butt kickings on what you think is the perfect trade, dollars to donuts, this is the problem. So in this scenario, if I wait for a close on correct side, I'm no longer fighting. This is the NASDAQ scenario that requires patience. If the large chart says go, if the large chart has momentum, if the large chart has a clear path, if the small triggers are less than a full bar away, I'm going to be patient and I'm going to wait for the close on the correct side. And then here's the opposite. If when price reaches my area for entry, Jen, look at how far away your small triggers are. So let's write it into a rule. If at entry area, smalls are, which one is greater than, hold on, are greater than a full bar away. Is that right, or did I do that backwards? I always mess that one up. That's like spelling beautiful to me. I will enter at the area, and if need be, I will manage if the triggers hold. So guys, this is the keys to the kingdom for NASDAQ. This is the easiest way to stay out of trouble on the NASDAQ. This has been tested. This has been screwed up 1,000,000 times by me. I'm going to drop this one into the spreadsheet as well. Whoops, I lost my link. And guys, we're out of pictures, so I'm taking my time here. Let me share the link again. And that's 2 different entries for the NASDAQ, guys. So if you're trading the NASDAQ, and I want you to see this, if you're trading the NASDAQ and you find that you're losing a lot of trades, even with odds favorable and everything up, go back and look at where the small triggers were. And guys, it doesn't guarantee a win every time, but it increases the likelihood of success dramatically. Go through the whole thing. Small triggers win. So Jen, on those ones where you're hoping that the midband holds, Small triggers might force a little patience. When I get to the area, the smalls are there, even with the best look, it forces the patience. So you guys that are NASDAQ traders, does that make sense? Does that help a little bit? But when those small triggers are a full bar away, I'm in at the area, guys. I've got room to manage if those small triggers decide to hold. Full bar away, I can get at the area, I can reduce my risk, I can maximize my profit potential. Reaches the area, don't fight the triggers. And then there's your 50, nope, this is it right here. Because I get to the area, it's a full bar away, I've already got my risk established. So good stuff. Hey, Ron, have a good one, man. See you at the chili dog store. I had chili dogs the other day, and true story, Ron, I can't have chili dogs and not think about you in some capacity. And that's just weird. So Jen, bangers and mash, right? So the banger is the sausage. I'm trying to make it British real quick. Okay, so put the sausage on a bun, on a piece of bread, and then cover it with American-style chili and cheese and onions. And it is the most delicious thing ever. So it's a hot dog covered in chili and cheese and onions. And I feel compelled to stop class right now and make sure that you get this. Where are my images? And really what it is it's this magical, wonderful thing. Do they have Sonic drive-thrus in Britain? I don't know if they do. No? Well, Jen, it just seems to me like a trip to the States is in order. If for nothing else, chili dogs. Just a lot of pubs. Yeah. I'm going to send you a care package with hot dogs and chili. And I know they have cheese there. Because I feel like you're missing out. So guys, great work on the NASDAQ there. Great work. And you've got to do these. You've got to do these over and over so that they become easy. There you go. There's all the chili dogs, Jen. And then let's look at the picture that you gave me, and let's talk about it real quick. And guys, this is how class gets distracted. And I love it. What a wonderful thing for it to be a little laid back. Awesome, D-Rock. No, don't ever be sorry. So what do we have? We have a termination condition, right? And we're getting weaker triggers. And this is a pretty good lesson. And let me show you this one. And guys, you're going to see this a lot because a lot of you get tempted to go short before it's ready. That's a beautiful termination condition right there. But look at the strength of the triggers into the area. Does everybody see that? Look at the strength of the area of the triggers into that area. And it does create a bounce. But the buyers aren't done, not with that much momentum, and they get to the second area with weak triggers. You see this a lot, guys. You see it so often that it actually shows up in these tops and bottoms videos or pictures. Is you come into an area with strength, and even though there's a retracement, it comes back into it with weaker triggers, and suddenly that's kind of what changes the dynamic. You come into it with a little bit of strength, and a lot of times there's a retest, weaker triggers at the exact same area, and that's what's able to set off the reversal. So one of the things, and this is a great example too, strength into the area. Guys, it's more likely to fight when there's strength than when there's weakness. So what else do we notice? You did get 3 divergences, right? but there's still no short trades because we're not fighting triggers. And now we're weak triggers. We made it to the edge. And Jen, what you're noticing now is this little change. Your large triggers are beginning to roll. Your small triggers are starting to get below it. You're just watching the fight on the small chart. And check this out, guys. And Rob, I think we talked about the fight earlier. Man, I saw that. I saw the video this morning. No kidding. And I can't see, but Jen, check this out, and I think you'll dig this. Whoops, that's not if you can't see it. And guys, I think everybody will dig this. That's about 5 bars from that hit on resistance. These are all the bars inside of those 5 bars. This is fights happening right at key areas. And when I teach termination conditions, guys, I try very hard to remind you that this is where fights happen. This is where decisions are made. This is where the people in control, or the people with the capacity to be in control, are making decisions. And while the large chart just looks like up into the areas, look at all the fluctuations on the smaller, faster chart. And this is one of the reasons, that we don't have to be first in the market, that we can allow them to have their fight. We can let these guys go through and duke it out, sometimes for hours, and never get caught up in the nonsense that they create. And there's this picture that I have. And I call this picture the might versus has, guys. When you get into the key area, there's your first hit, and the fight begins. And then the smalls get below the large, but there's still a fight. And then the smaller up and the larger up, and there's still a fight. And if you're patient and you wait for that odds favorable back down the other direction, if you wait for them to say, hey, guess what? The buyers are done. They quit. They're not going to do it. Then it creates an advantage. And you'll begin to find these. So if it ends up pushing through, Jen, hold on. Let's go to the NASDAQ. And let's talk about it. That's gold. There we go. So the question was, Mark, if the triggers push through, then we go, and the triggers are strong, and they get through, well, then we go long, right? The same way, when that was a termination condition, and we chose to do nothing, and then we stayed out of the fight, and then it had the potential to break, and maybe you go long right here. And the challenge is that it never fully broke until it hit the fib. And look at the push down. And there's your push up. And now we're in. And that termination may create a reversal. So Jen, if the triggers got above and we had that path and the rules were met, absolutely, we could go long. And the other side of that is that if this rolls and I get odds favorable to the downside, well, then I'm looking for a short. But the reality is, and this is what I love about what we do, guys, and this is why I'm such a huge fan of rules, is I didn't have rules met here for a long trade, and I didn't have rules met here for a short trade, and I didn't have rules met for a long or a short or a long or a short. Take care, Cav. So do you see how you never had to get caught up in that fight? And if only the small triggers are through, absolutely, that's a 50-50. And let me go back to the picture. And guys, here's the cool thing is we're at the tail end of class and there's no more pictures. Actually, D-Rock, I'm going to get to yours in just 1 second. But here is the is it broken picture, Jen. And let me give you this. So the first picture shows what a termination condition looks like, right? And everybody gets that pretty easy. The triggers don't break. Even though I want it to break, I have to say, I don't know what's going to happen. And then the small triggers smash through with all that momentum. And now I say it has the potential to break. And that's your 50-50. And then when the small and the large get through, now it's a clear path. The triggers lead the way. The momentum lets you know if it has the potential. So great questions. And I think that that was a pretty good little digression away from the normal, what we're doing. Oops, sorry, and I forgot Ron's trade. Odds favorable to the downside, divergence from a fib. You got in earlier than you typically do and got out. But that's a reason to exit. And because it's a reason to exit, Ron says, I'm not going to go short. I'm just going to ride the wave up. And then this is where I get to call Ron. I get to call BS on Ron. You're not in with divergence because divergence didn't print till up here. You're in with the anticipation of divergence. Mr. Ron. Do you see that? You jumped the gun, my friend. It's rare that I get to call you on breaking your rules. But that was the anticipation based on the areas. And that's one that may lose a little more. All right. D-Rock. Let me see which direction you're going. Odds favorable, 50-50. Okay, so let's talk about this. Couple different things, D-Rock. You ready for the lessons? Is it odds favorable? Yes. Is it odds favorable? Yes. Is it odds favorable? No. So how are you going to trade a momentum style trade if the one chart that's telling you to take the trade doesn't have momentum? They're on top of each other. And where you got in, yeah, they're one on top of the other. So that's problematic. And then if it's a 50-50, and let's do this. If it's a 50-50 from a bad bottom, D-Rock, what kills it? Divergence. Wouldn't you agree? Divergence kills a 50-50 from a bad bottom. So, if you know that this is a killer, does it make sense to be a little patient on your entry? Does it make sense to say, hey, you know what? I'm going to give it till the third bar to make sure that divergence doesn't print on this 50-50 from a bad bottom. And that's okay to do, right? And then what happens is when it does print, you say, okay, now I'm in 50-50 mode. And since I'm in 50-50 mode and it's from a bad bottom and divergence printed and my window of opportunity is freaking huge, now that don't fight the small triggers lesson comes in. So understanding what kind of trade you're taking and what your large chart is saying has a lot to do with it. And then let's go through what might be the flip side of that is if I'm coming from a termination that creates a full reversal, right? And I've got the best momentum look ever and it's a 50-50, your momentum trade, D-Rock, was right here. Where you came off of support and the small triggers got above and it pulled back. And I'm telling you guys right now, having areas to trade from is huge. Momentum trades, so this is more of a jumping in, right? It's not a clear path. Divergence is a loss of momentum. You're not odds favorable here. But these are the things as you work on brand new trades, guys, you're going to have to work through these little things. I love a momentum trade. I really do, D-Rock. I'm a huge fan. But what happens is when we start to learn them, when you guys start to learn these new trades, you operate once again in half-truths. You operate in seeing what it's going to take to get you in rather than the big picture. Because there's your first down up, right? Which was from 1600, but that was your first down up right here. And maybe that was the first one. I don't think so, though. I think it was this one right here off of support. So it already happened, right? That down up already happened. And then you get another down. So it goes back to that thing. If you think this is your trade, is it okay to let it start back up? Is it okay to let it start going up? Is it okay to let it get beyond the bottom of the previous bar? Because this one never gave it. Does that make sense? I'm just trying to dissect it. Cool. This is the frustrating part of learning a new methodology, is we really do. We find ourselves trading half-truths, incomplete thoughts. That's a termination. Smalls are on the wrong side of the large, so it's not the best momentum, right? It can't be odds favorable. Hell, it hasn't even worked its way into anything can happen yet. Hey, Divine 46. So once again, without momentum, you're looking for momentum. Without odds favorable momentum, you're looking for momentum. Does that make sense, D-Rock? Do you see how so much was going wrong with this trade before you ever entered? And then I'm going to go back to real quick because I think these are great lessons. I want you to look at Zorro's momentum chart. Odds favorable, odds favorable, odds favorable. Breaks the area, pulls back to the area. And this is, man, guys, this is it. This is the look, D-Rock. And yesterday I was telling my brother, because yesterday it was kind of funny. I had, I think, 5 or 6 different trades labeled momentum trades, and none of them had momentum in them. None of them had momentum in them. So my brother said, I'm going to show you guys this. My brother said to me, whoops, let me do it again. My brother's reply was, tell them to show you momentum on 3 different charts at the same time, and that will fix it. I was like, John, what's the fix, man? I keep getting these pictures of momentum trades without momentum. And he says, you know what? Just tell them. Show you momentum on 3 different charts. Zorro did exactly that, and his win was effortless. And I think that's the thing. The difference between getting close to a trade and having a rules met trade. Oh, and that was Ron's. Did I get all of yours? Yeah, one of them was posted twice. Hold on, let me look. I think you gave me one of them. There's that one. We saw it. I think this is the one that I missed. Nope, that's the exact same trade, and I'm clicking on different links, but it appears to be the same trade. Am I missing something? Here, let me clear out everything D-Rock real quick. All right, so there are no D-Rock trades here. So I'm going to click on your first link. And we talked about this one. 50-50, wait for the divergence, not odds favorable. And then we had this one, which is, it looks like the exact same trade. Bad bottom. Nope, this one you didn't label 50-50. It still has divergence. And you're outside of the outer bands on a 50-50 with divergence. And one of the cool things is, D-Rock, is that a 50-50 with one divergence, it gave you a beautiful trend trade. But you're so focused on not missing the big move that you're missing the big picture. Does that make sense? That's an awesome looking trade. I don't know why you didn't. Even from the right side, you get paid all the way up to the second loss of momentum. But hold on just one second. Okay. But does that make sense? This is the exact same look. That's a 50-50 from a bad bottom once again. So now we've recognized a pattern. This is what's awesome, guys, is now we've recognized a pattern. 50-50 from a bad bottom with divergence is a 50-50 trade killer, which means that if my large chart says 50-50 and I don't have odds favorable on all three, it's okay to miss it. And then once again, you do have smalls working their way outside. But man, you're already exhausted. You're already beyond that mid band. And if divergence kills a 50-50, being patient to wait for the divergence or being patient to wait for the up bar to start, right? So that you at least have risk managed, I think goes a long way. But D-Rock, it's cool. We just recognized a pattern. When your large chart's 50-50, and you know that divergence could kill that because it's from a bad bottom, maybe a little safeguard. And again, guys, I never tell you how to trade. I don't give trading advice. Maybe the safeguard is to wait to see if that divergence prints. And let me go back to this picture because this gives us hope when, oops, maybe it's in my library. Guys, this gives us hope when we're so excited to take a trade is if the momentum's not perfect, right? Every failed momentum trade has the opportunity to become a trend trade. Your failed momentum trade turned into the perfect trend trade. So what you can do, D-Rock, is you can say to yourself, this isn't perfect for the this isn't perfect for the trade. Therefore, for me, I'm going to be patient and I'm going to wait for this one. And I'm going to miss a few of them. And then we talked about waiting for the confirmation. There is your reversal bar with an arrow right at the area where you expect that market to go from. Does that make sense? A little confirmation. And what's cool is when this second divergence pushes you right back to support again, your market flow gives you another confirmation on the correct side of the small triggers. And then I remember a third divergence printed up here. And notice that you get below those fast triggers and it screams all the way back down to support. And then it's odds favorable against. The curse of being a great chart reader is that you're going to have to work through the desire to see every trade and make sure that your rules are met. And if you think about it logically, and if you think about it pragmatically, and if you start on the large chart, and I'm going to do this one more time, and this is how we're going to end the day, guys. Nope, Jen, we'll end with yours. Whoops. So I'm going to go through the way I would read this chart, and I'm not saying that my way is the best way. But my large chart says I have a 50-50 with odds favorable momentum from a bad bottom. What does that mean to me? My entry on the small chart should not have divergence. So this is just me. And D-Rock, you may not stick to this because you may want to catch more trades than I'm willing to catch 3 or 4 a day instead of all of them. So my small chart may print divergence. Do you have your divergence potential on where you see that negative number flashing? So for me, I wait to see if it's true. Because I know that that kills a 50-50. It's certainly got to kill a momentum trade. Divergence is a loss of momentum. And then let me go this way. If I have odds favorable momentum, big gap between small and large here, I may go without confirmation. But because this chart isn't perfect, I need to sit for a sec and see. And then the flip, and then one more. Even if the momentum isn't good, I know the next trade up is a trend trade. So I'm not saying, and I get this thought process in, it's not this or nothing. It's if this doesn't set up right, then I'm going to wait for this. And this is where you have to make the decision. Are you willing to have that much risk on it? If you are, awesome. If you're not, for me personally, D-Rock, I skip the trade. And that's just me, is I skip the trade. And it doesn't mean that that's right for you, but straight out of the NASDAQ, there's a 50-50 with one divergence, and my small triggers are really, really close. And then the next picture is the exact same concept. Am I willing to risk it from all the way down here? Do I want to put that much risk on a trade? Because then I have to have arbitrary stops if I don't want $300 on the trade. So I say to myself, I'm not willing to risk it, and sure enough, a second divergence prints. You're looking for the trade, not the advantages. So if you take that up bar, D-Rock, does it fight the fast triggers? Yes. Is it still a 50-50 with divergence from a bad bottom? Yes. Does it fight the small triggers on the small chart? Yes. This bar isn't magical. But this bar confirmation, this close above, this getting above the small triggers might be enough for you to say, man, I'll take a shot to get to the trouble spot. There's enough money for me to make right there. And maybe if this becomes a down bar, I cut my ties. And that's where you've got to kind of work through your own idea of what's acceptable to you. I hope that made sense. Mark, resistance held, but there's a gap between small and large. Need to be more patient unless there is a gap. Well, the gap theory is full-blown in effect, Jen. When those small trigger, or when those large triggers are a full bar away, look how split they are. And you already have one divergence, two divergence, now a pivot stop out. Let's go see what happened. Good thing you didn't go short, huh? And then support holds, right? And now they're trying to go. I love it when your bacon is saved, Jen, because eventually your bacon gets saved enough that you begin to believe it. All right, Zorro, directly into the termination condition. But you do have odds favorable momentum on your range chart. You do have odds favorable momentum on your small chart. But Zorro, can I give you just a little bit here? If this is a term and that is one-to-ones beyond the outer band, this becomes a much lower probability scenario. You just don't have any room to get anything done. Does that make sense? You just don't have room to get anything done. You're right into a termination condition. And while this one worked and you were able to make a little money, I think what you'll find is this one is less likely to work because these one-to-ones are more likely to create a bounce. This outer band with one-to-ones is more likely to create a bounce. So letting it bounce and then maybe looking for your opportunity from that 08 range if it sets up for you. Might be it keep you through some of the stress. And this was a good little hit. I mean, it was a good little hit, but I don't know that that one's going to win as much as it loses with that scenario there. And now, Jen, here comes your 50-50 from a termination that created a full reversal. Do you see it? The things you didn't do in this nastiness might set you up for something here. So D-Rock saying, I want the momentum trade. D-Rock saying, I want the momentum trade. No, let's do it. I'm not working at the tattoo shop anymore. I got plenty of time for you. Drop them in. All right, let me see what we have here. Start on the large chart, right? Large chart leads the way. Weak triggers with working divergence, possible good bottom. Never in a million years, D-Rock. Never in a million years is this a possible good bottom, because this is a clear path to the downside. Every trigger has gotten through the fib. There is no reason at all in the moment to believe that this resistance won't potentially hold to the downside. In fact, Jen just went short at the mid-band because of that potential. No, let's go through it. So what happens? The small triggers do roll and things do start to go up, but they went up directly into a termination condition. All of my triggers are below another form of resistance, right? And my large triggers haven't even rolled yet. And I'm on the wrong side of momentum. And I'm on the wrong side of the triggers. Can you tell me what kind of trade this is? Can we define it? What trade says without momentum, with all the triggers below the area, directly into a termination on the wrong side of the small triggers? Can we name it? I can't. Not really. But when a couple don't work, you start trying to make something work, is what I see a lot. And now let's look at this one. One divergence, not a good bottom, right? And then it goes all the way to the mid-band. Gap theory takes us back to the large, and it overruns, but my triggers don't break. Now I have a termination that creates the full reversal. That's a good bottom. That reversal gives me the best momentum ever, and notice how I smash through the area, not just peek my head. Do you guys see the difference? This is such a beautiful picture, such a good lesson. I want you to see this. And if here it tries to peek its head, here it smashes. Here it retraces and kills you. Here, with that smash through from a good bottom, only one divergence, why on earth did you get in here and not at the area in here? Because all you want in life is this one down, one up. A little early. No, it was right on time for you. You called it right here. One down, price on correct side, but look at the momentum. It works, right? And you have an awesome 50-50 trade protecting it. Does that make sense, D-Rock? And you let it blow through the areas and traded back to the areas. Jen, you're fine. You're fine without the range chart right now. Just get your good lessons in. And then what happens is once you trust these two charts, you can start to look for a little confirmation, a couple more trades over here. But, and D-Rock, I apologize for this. D-Rock has shown us that if you stop letting the large chart lead the way, this chart will talk you into a bunch of BS. And we saw that on quite a few. D-Rock, this is the trade, and the only thing that gets me here is the small triggers didn't break it through. Didn't break through those pink 1-to-1s at the time of the pullback, not yet, which means that it's probably going to bounce a little lower, which pulls that one up, one down out for me. Yeah, it's close, but I think it's great. You're in a little early, but you know where your stop has to go, and then you held that beautiful momentum all the way up to resistance. Notice that resistance lines up with the outer band, not a coincidence. What a great look for getting paid. And notice the separation, the actual separation, and that's what makes it easy, brother. That's what makes it easy. You just know when a trade is good. Your palms will sweat if it's not. They really will. Your palms will get sweaty if not. Haji, where'd your picture go? And then Gary, you're all good? Nice job. And then Haji's dissertation, and then we're going to call it a day, guys. Just to document the crazy. Just opened NinjaTrader, entered the trade seconds after opening the chart. Didn't notice yellow 1-to-1s. Good bottom? No, not a good bottom. 50-50 that failed. It's not a no triggers through termination. You're welcome, D-Rock. Thank you for being here. Into a termination, everything up, not at an area. You hold on anyway, and then you get paid up here. I'm glad you were on your sim account, Haji. What a ridiculous thing to do. To trade directly into a termination and a 50-50, not from an area, hold with outlandish risk, and get lucky. And you broke rules. Trade into a termination, do a full pre-trading checklist, don't enter within seconds, hell of a way to start your morning. Hadn't even had a sip of coffee yet. Haji, I've done it. I've done it enough that I've had to stop myself. I will literally not trade until I've had a cup of coffee, because then I can guarantee myself that I'm going through all that pre-flight checklist the way you said that you needed to. I'm glad you won, and with that much momentum, this goes back to, guys, it retests a lot when it hits an area that strong. I think you got lucky, absolutely. Because you didn't even wait for the window of opportunity. If you had gotten in at the mid-band down here inside of the synthetics, I'd be like, hell yeah, Haji, way to just take a shot from the best area with low risk. But you said, oh no, it went up, I better jump in. Good stuff. Not trading before a wine? Have one wine, Jen. Yeah, it's great. And I love that you still talk through it. Guys, if you can't trade on one wine, you don't know your rules. If you can trade on a box of wine, well, you might have a drinking problem. Guys, that's it for me today. Thank you for the amazing annotations that you guys gave me. Thank you for all the great presentations. Thank you for having the courage to post, to ask, to give me the opportunity to cover things that you needed covered.